Good morning, everybody. Welcome back to another episode of the Market Open. Thank you, everybody, for being here. We are live. We've got a lot to talk about. It is Thursday, December 4th. A bunch of different headlines that came out yesterday, and we will discuss them. The biggest one being Jensen on Joe Rogan. I really did not expect that one to happen, but it did. And we got a bunch of clips from that podcast that are going pretty viral, so we'll talk about that. You got some new updates this morning. We got some jobless claims data. We have some labor market data, some of it being good, some of it being bad. We've got Palantir. I know Palantir has not really been in the news for the past couple of weeks, ever since earnings. A lot of people have been asking what's going on. Well, they put out an announcement today, and it's a pretty big one. That was, oh, wow. And as I'm talking, Vlad's on CNBC. All right, boom. This is why we have multiple screens. We are a professional media production. Okay? Let's go to Vlad. Here we go. This is why we have two screens. And then we'll get into all the headlines that we got today. Vlad Tenev, CEO of Robinhood, live right now.
What does this all ultimately look like? Meaning, A, who's using it and how are they using it? But B, are there going to be 10, 20 firms that basically are doing this in different ways? Is it all going to be merged up into two or three of them? What does this look like in your mind?
Yeah, I mean, two things there. One thing a lot of people don't understand about prediction markets is actually a relatively small percentage of the customers that are interacting with prediction markets are actually trading. The much bigger use case is as a source of information, almost as a complement or alternative to the news. And that's why you see a lot of news networks starting to integrate prediction markets into their reporting. I think prediction markets are going to change the world for the better. Perhaps they already have. And the ability to price any event accurately, I think, solves a big problem that we've had for multiple decades, which is we're flooded with all of this information. Anyone can produce content and share an opinion, but how do you get to the ground truth?
It's interesting you're thinking about it more, and tell me, maybe I'm wrong. Are you thinking about it as an economic vehicle? Meaning, when I say economic vehicle, something as an exchange or a company like yours that creates a profitable business because millions and millions and millions of people ultimately are actually trading in the prediction market, or is it the funnel of data that's coming off of it that ultimately is more valuable?
I think that in terms of what's valuable for society, the funnel of data is much more interesting because, whereas only, let's say, hundreds of thousands of people will actually want to trade what's happening in the election, the information of who's likely to win an election is something that affects hundreds of millions.
But I guess that's where I'm going with this. Ultimately, do you think it really is only hundreds of thousands of people who will trade this stuff? Or do you think it actually turns into to be a much larger business, the trading of it unto itself?
What we're starting to see is that, at Robinhood, we started with one contract a little bit under a year ago, which was the presidential election contract. And now we have over 1,500, I think maybe even 2,000 or more. And that's going to continue to grow. And it's going to continue to get more specialized and granular. So I think it will, in aggregate, increase the total number of traders because, the products allow you to specialize. Relative to other derivative products, they have pretty clear resolution criteria. You can kind of understand when the contract resolves positively or negatively, and you don't have to worry about your exit point, The exit point is sort of like put free. So, but I think for any individual contract, the number of traders might not be huge, but in aggregate, there's going to be lots more contracts.
The other prediction market question I have that I've been thinking a lot about is, I know a couple of people now who say they're playing the prediction market as a hedge against other things that they're doing. Meaning they might own stocks in something, but they're using the prediction market as a hedge against those things, which made me start to think, well, then when we see the results of a prediction market scenario, is that a believable scenario if, in fact, somebody's trading it to actually offset something else?
Yeah. Well, every derivatives market has three participants. You have the speculators who are trying to predict the price. You have hedgers that are offloading risk. And then you have arbitrageurs who are connecting all the different markets together. And I think for a functional market, there has to be equilibrium of those. you can't just have people hedging, to your point, because then it won't reflect the, it wouldn't be an effective price if it wouldn't be as effective of a hedge without speculators. And I think that's another thing that people don't understand. Speculation is actually integral to the functioning of any market.
You do need some speculation.
Yeah. The thing is, can you have the equilibrium of all of those? And I do think, to your first question, it's going to evolve similarly to other equities and derivatives markets, where there will be a lot of exchanges. And I think Robinhood benefits in that world, because a lot of exchanges means lots of choice for us as the broker, ultimately better pricing, more competition for the customer. And like we do on the crypto side or the equity side, we connect to dozens of different venues and market makers and route to whoever offers the best selection and price.
I just think there's a lot of hand wringing. We had Stiefel on the other day, Ron Krzyzewski, talking about the rise of all types of speculation, including gambling, prediction markets, perpetual futures, all these things. And then I think back to that was always a wrap on commodities. It's speculation, but the real use for commodity futures is for farmers and airlines that are trying to hedge fuel costs. I mean, the most of the trading is done. You need the speculators for the liquidity, and but there's a real use case other than gambling for all this stuff.
Well, to his point, not everyone can be hedging. You need the speculators. You need the speculators. Otherwise, the hedgers don't have accurate prices.
Right.
But yeah, to your point, this is a criticism as old as time. Every time there's a new asset class, people with futures, people say, "Oh my God, there's gambling." There's
the meme stocks for gambling. Right.
Yeah, I mean, I'm not going to say that, there were no speculation in meme stocks, but I do think.
But also that might have cured the naked short situation or whatever. There may have been a reason for that as well. It's all cathartic, all this stuff, or else it wouldn't be happening, right?
The great thing about markets is they're transparent. Right. Anyone can participate in the ideal case, and you bring together lots of different participants in a common framework. And I think that's why this has been so disruptive.
What do you see happening with your customer base right now as it relates to crypto? Because we keep talking about crypto every single day. Bitcoin, came down. I mean, really came down. Now we're at 92,000. So the low recently was what, about 85?
Below that.
Below that. And how connected do you think the price of Bitcoin is to what's happening in the equity markets right now?
Yeah, I mean, I think that equity markets have been fairly strong. And this is the other thing that you can see with prediction markets. One of my favorite things to look at is the Fed decision contracts. And you saw toward the end of October of this year, we were at 85, roughly 90% chance of a cut in December. And then you saw the odds of the cut plummeting. And actually, towards the end of November, the leading option was the Fed would not cut. The rates would stay the same. And you saw that was basically correlated with how the technology sector did. Mm-hmm. So these things are very connected. And then right now you look at the odds of a cut back up to 90%, and the markets have recovered.
That's what we just were saying. Now it's the next cut we're worried about. Anything that indicates that maybe the next cut is and it is in question, the next one. They may skip.
Absolutely.
And now we're worried about that one.
You can track the markets on that as well. Yeah. But yeah, I think Bitcoin has decoupled from technology a little bit in the past couple of weeks. And I think there's idiosyncratic concerns about the DATs, of course. But the great thing about our platform, we offer everything under one roof. So prediction markets are ripping. Even if there is some weakness on the crypto side, customers are still depositing money. They're trading a variety of assets. And we want to be their financial and trading super app.
Can I ask you real quick about something that I think you're doing that's super cool? I mean, you do a lot of super cool things, but these Trump accounts, I haven't seen you since it was announced with Brad and with the Dell family.
It's unbelievable.
It's really extraordinary.
It is.
Extraordinary.
And I think they could change the world.
And you're involved in this in terms of providing some of the technology, or how are you engaged in this?
Are you arguing? We got to call it something else for you people. I mean,
what do you mean for me people?
Well, not you people. I don't mean you. I mean just for people that hate Trump. We can't call it Trump. We can't call because they're a really good thing, and there's a lot of.
That's what Gavin Newsom yesterday. That was actually one of his comments. He said that
can't be called
hijacked
Trump.
the name and that it should be, invest in America or
It
whatever.
can't be
Anyway,
called Trump because half the country won't like him.
Look at Vlad just sitting there watching mom and dad argue about politics. And he's just like, guys, I'm just providing the tech. You can call it whatever you want to call it.
No, but how do you think this is going to get implemented? How easy is it? And how involved are you? I saw you were quoted in the journal article, I think, about this.
Yeah, so there was an event at the White House to announce the creation of this initiative as part of the budget reconciliation bill. And I was there sort of as a representative of the retail brokerage industry. I've talked to the president about this personally, given him my assurance that I care a lot about this, and Robinhood's ready to give technology resources, operational resources, put our best people, because
We'll get you with Scott Besson and get this whole thing.
Well, I think this is super important, particularly now, because getting people from a young age to buy into our free market system and be owners of America, I think that could solve a lot of the problems that we have brewing.
Can we just put out for Michael Dell is one of the good billionaires. I mean, most of them are all.
All right, that was Vlad this morning on prediction markets. Again, I was talking about it on Monday. I've been doing a lot of research on it. I will have a Substack post coming soon on prediction markets. I think the industry is here to stay, and I think it's going to continue to grow. And if Robinhood is a major player in that industry, I think there's going to be a lot of different ways that they can basically use what's happening in the industry to become a not only revenue stream for the business, but put Robinhood at the heart of the intersection of financial data that more and more people are valuing. And I think a lot of institutions are going to value that data over time as well. All right, so that's what we had with Vlad on CNBC. Let's get to the Palantir partnership that announced this morning. So this is a pretty big deal. Palantir has launched a brand new product. So they have Foundry, they have Apollo, they have AIP, they have Warp Speed, which was kind of like reindustrializing America. Now they are introducing an operating system for American AI infrastructure, AKA they are getting into the data center race. Palantir launches Chain Reaction. That is the name of this new product, and the founding partner of this product, founding partners, are Centerpoint Energy and Nvidia. Chain Reaction aims to transform aging power generation into high uptime resources capable of meeting AI's massive demand, stabilize and expand the power grid to meet surging demand from data centers and electrification, accelerate construction of new generation, transmission, and compute capacity, and enable the design, development, and reproducibility of future hyperscale data centers supporting AI workloads. So everything we've been hearing about data centers, every deal we've been seeing, Google spending $40 billion, Meta spending $28 billion, all of that accelerating at scale. I mean, last week, Amazon announced they were spending $65 billion, $15 billion in Indiana and $50 billion in Virginia for data centers. Palantir is like, wait a second, if you're going to build all these data centers, if you're going to have all this energy infrastructure, if you're going to be able to manage the ecosystem that is required to get these data centers online and actually make AI real, because without the data centers, without the energy, without the compute, it's not possible. Our software should be at the front lines of this. Vice President of AI Infrastructure at Nvidia said, a new industrial revolution has begun, one where intelligence is manufactured at scale through an extraordinary complex supply chain of AI infrastructure now being built across America to strengthen our economy, workforce, and security. By partnering with Palantir in our ecosystem, we are accelerating the transformation, powering the engines of the AI age, transforming data into intelligence, and securing America's technology leadership for decades to come. And of course, as I'm announcing this, Meta is pumping. I can't get through one news story today without something else happening. Goodness gracious, Meta 3% right here. Why is Meta pumping? Did they announce a new? Kris is about. If Kris is sleeping, this is gonna somehow. He's just gonna know that his options are printing right now, and he's gonna wake up somewhere. Okay, why is Meta moving? Can't even get through my Palantir segment. What's going on with Meta? I don't see a headline. There's got to be something coming pretty soon. We'll get back to Palantir in a second. Let me just see the reason why Kris is not sleeping. See, I knew he was there. Oh my goodness. He did it. Meta Zuckerberg plans up to 30% cuts for metaverse efforts. Oh my goodness. Zucks woke up and he realized he can't keep spending on the metaverse. Wow. By the way, Kris, Steve, and I had a Meta podcast like 3 weeks ago, and one of the things we all agreed on was that if Zucks comes out and says, yeah, we kind of don't need some of these initiatives like Reality Labs anymore, and just says, hey, we're going to pull back a little bit, stock's going to go up. That's all they had to do. That's all they had to do. And this was part of Kris's thesis. That's why he bought those naked calls. He knew that, or he at least had a thesis that eventually Zucks would pull back some of this honestly nonsense spending, and the stock would react to that. Look at that. Zuck said, I want to be in this Santa Claus rally as well, and I am pulling back my spend. Wow. Dude, this makes so much sense. Like, no one uses the metaverse. They lost $4 billion last quarter, not last year, last quarter. In 90 days, they lost $4 billion on something no one uses. $30 on the day, and it's going. It's not stopping. $34, 672 on Meta. Oh, but Kris is not going to work today. Kris is going to be staring at these options all day. There you go. Congratulations if you bought the Meta dip. I mean, I bought the Meta dip. I did not buy as heavily as our friend Mr. Kris Patel. And that's why I shouldn't get the crazy gains as our friend Kris Patel. I mean, this is the beauty of the market. If you have conviction, if you go against the consensus opinion and you take a heavy bet, you could be rewarded. And so for those that heavily bought this Meta dip, congratulations. This is big, and I think when the market opens, now, could this get sold off when the market opens? Sure, anything is possible. But if it gets sold off, people are buying that dip again, because guess what? EPS just went up. Operating income just went up. Free cash flow just went up. I mean, pretty much every operating metric that Wall Street cares about, especially in the age of hyper CapEx spend, where Wall Street wants to see certain verticals that are effectively being spent, even if your CapEx is high. All of those metrics just went up if this report is correct that Zucks is pulling back metaverse spending by 30%. And there you go. That's why Kris was in your dream. Dude, I said yes. You guys didn't believe me. Kris was in my dream yesterday saying buy Meta. I woke up thinking of Kris. I'm like, why am I thinking of Kris, dude? And I realized, dude, he was just in my dream. There you go. Congratulations. If you bought the Meta dip heavily, there you go. 5.2%, 673. If you have Meta options, those are going to be up much more than 5% on the day. And here is the move. Matthias says, I loaded up on Meta under 600, was screaming buy. You know what's going to happen today as well? A lot of people are going to jump into Meta. A lot of people, because, you know, the market waits for a piece of news that can change the narrative. The people that buy the dip believe that the narrative will be changed before the narrative changes. And that's, you know, Google shareholders saw that heavily happen this year. If you bought stocks in 2023 when narratives were really bad and then the narratives changed, you saw that happen as well. And, you know, this is another classic example happening with Meta. So we'll see when the market opens if this can sustain itself. I find it very hard to believe it completely sells off, but this is a big deal. I'll try to get some more details on it. Right now, the headline is Zucks is pulling back 30% of metaverse spend. And also, the other meta news we were about to talk about is that they just poached one of Apple's senior design engineers to work on Meta, or to work on a new product at Meta. So that's also a big piece of news, just given the person who left Apple has been there for a long time. Mark Zuckerberg and Meta have reportedly expected to meaningfully cut resources for building the metaverse. Executives have reportedly discussed potential budget cuts as high as 30% for the metaverse group next year. So this won't show up in the next quarter's earnings, but for fiscal year guidance 2026, that could have a meaningful increase if they're cutting 30% of the spend for the metaverse. Now, granted, that spend might leave the metaverse and go to CapEx. So there is a nuance here that the spend might not automatically show up in the operating metrics because it's just being diverted spend. However, if it's being diverted spend on something that has a real chance of working, like AI, not a metaverse that no one uses, then maybe the street forgives it. You know, maybe the street doesn't send it back to 800 anytime soon, but the street forgives it, and they're more excited to bet Zucks on spending another $15 billion on CapEx versus $15 billion on the metaverse. So there you go. There you go. Yeah. And look, this is actually bullish Nvidia, because if it is going to go back to GPUs, bullish Broadcom, Nvidia, Google, if there's going to be more TPUs, AMD, you know, Meta is like, I think AMD's biggest customer, or their second largest customer. So you got Nvidia getting a little pump right there as well, 0.53%. And, you know, honestly, this is bullish the entire market, because a lot of that spend on the metaverse was doing nothing for all of us definitely was doing nothing for metaverse shareholders or for Meta shareholders. So if that spend is diverting and just going into other initiatives and eventually into other stocks that benefit from those initiatives that all of us own, yeah, that's actually a really good announcement for the entire market, not just Meta itself. Meta right there, 5.7%, 675 on the day. All right, so that's what you got for Zucks. We'll get back to that story in a bit, and we'll see if we can get some more details to wrap up what's going on in the world of Palantir. Again, I think the Palantir announcement is a very, very, very big deal. They are partnering with Nvidia to build a brand new product. The founding partner of this new product called Chain Reaction is Nvidia, and it looks like Palantir is bringing their software to one of the largest industries growing at an exponential pace, which is data center and energy. Now, the Palantir quote from this is right here. Let me pull this up. This is from Tristan Gruska, who is the head of Palantir's energy and infrastructure investments and build out. The energy infrastructure build out is the industrial challenge of our generation, yet the software that the sector relies on was not built for this moment. We have spent years quietly deploying systems, keeping power plants running, grid stable, and orchestrating complex supply chains. Chain reaction is what it looks like when you rebuild from the ground up for the demands of AI. Very big deal. Makes a lot of sense. I think this is going to be one of those announcements that, look, I don't know if it has any impact on the stock today, because at the end of the day, it's a new product announcement. It's not necessarily a brand new contract or anything. But if you think data centers are going to be a very large industry, we looked at some JP Morgan reports 2 days ago that showed just the CAGR of the TAM of data centers. Yeah, it's obvious you're going to need software to make that real and to operationalize it in a meaningful way. I mean, a lot of these 10 gigawatt, 15 gigawatt deals, none of them have gone online. And for them to go online, you have a massive bottleneck of energy more than compute, and the software needed to make all that happen. I think obviously should be one of the companies like Palantir that has a relationship and experience with managing complex data sets for energy. So really important partnership for Palantir and Nvidia. Makes sense that they announced this today. And I think we are going to see Palantir play a heavy role in the data center build out, which again is them expanding their TAM, their revenue potential, and them being at the heart of this AI build out. Meta right here, 6.2% on the day, 679. For those that are just joining, Zucks is pulling back metaverse spend allegedly, as per Bloomberg, and 680 pre-markets. That's why this stock is up 6.4%. Could the Santa Claus rally be starting? Well, December 3rd, again, was the worst day in December historically. We got through December 3rd yesterday. S&P was relatively flat. This Meta announcement is a hell of a way to start the Santa Claus rally if we are officially starting it. And again, it's not just good for Meta shareholders. I mean, Nvidia's up 1%. Why is Nvidia up 1%? Because it's kind of obvious if Zucks is not spending on the metaverse, he's probably going to be spending a little bit more on CapEx, or a lot more on CapEx. And that helps everyone else. Roy says, I entered 50% of my portfolio yesterday to Meta shares. Wow. I mean, pretty good timing for anyone who bought the Meta dip in size over the past couple of weeks. I mean, pretty freaking good timing. Dude, Kris is about to buy a jet. Kris doesn't have spreads on Meta. Remember, with spreads, you cap your profits because you have the short call counteracting your long call. It reduces your premium you have to pay, it reduces your risk, but it also caps your profit. With naked calls, your profit is theoretically infinite. Meta could just keep going up and up and up, and the calls could just keep getting more and more valuable. And that's why we're getting some momentum. Kris, I'm going to give you a call real quick. Let's get your take on this. And then we'll keep going from there. Again, for those that are joining, Meta right here up 6% on the news that they are cutting efforts on the metaverse. Real quick, let me just show you guys the jobs data. It wasn't that different from what we've heard before. So in the month of November, U.S. employers made 71,000 new layoffs. That is up to 1.17 million layoffs for the year. This now marks the first year with 1.1 million job cuts since the pandemic lockdowns in 2020. That means that we need to cut rates. So 71,000 layoffs in November, the highest level of layoffs since 2020. Obviously, it means we probably should be cutting rates. The other piece of jobs data that is actually relatively bullish is jobless claims we get every Thursday. Came in at 191,000. The street thought it would come in at 220,000. So again, the labor market is weakening. We should be getting this rate cut, but it's not deteriorating. And I think that's a very, very, very important nuance for everyone to remember. If jobless claims were at 300,000, we would have an issue. They're at 191,000. Not good, but definitely not horrible. And it means that there is a world which we get a rate cut, but the labor market doesn't deteriorate, which ultimately means that corporate earnings can be strong with the Fed easing. And that means it could set up for a strong bull market going into 2026. Kris Patel, good morning.
I am about to send you something very interesting. Let me just hold on 1 second. So remember that day when
Kris, get closer to the mic. It's a little hard to hear you.
All right, you remember when we were talking about Meta, and I was like, "Hey, listen, I'm about 750,000 deep in this thing."
Yes, I do remember that because that's a pretty aggressive bet to make.
I lied. I have 1.25 million in it. And all naked calls, bro. After our conversation, I was like, I don't get this bullish on things without sort of convictions. I was like, you know what? So I cleared up some of my returns on my IRA, and I bought a lot of calls on there too. I just sent it to you. Take a look.
Oh boy.
Yeah. You know how when you had that Robinhood conviction, you were just like, screw it, man. I don't care what it is. Let's go. I was like, you know what? I've got conviction too. So I just,
are you saying you learned from me on this trade? Am I responsible?
I would say, yeah. Well, yeah. You know, I also was like listening to a lot of Druckerman. I was like, dude, if you know what you're doing, and don't be afraid to take.
Hold on. Let's play that clip real quick. This is why you. I was wondering why you shared this clip yesterday. I was wondering. Let's share this clip real quick, and then we'll get into it.
Give Ahmed his cut, bro. Come on, man.
No. I don't need any cut. First of all, Kris is the reason I even learned about options in the first place. But dude, I'm happy for you. It's not easy to go 1 million deep into a trade. And that 1 million, theoretically, these are naked calls, could turn into a lot more than 1 million. But this is what Druckenmiller said and what Kris shared yesterday, which kind of sums up the entire Meta trade.
Well, my idea of risk control is a little non-conventional. I like putting all my eggs in one basket and then watching the basket very carefully. I think, I don't know what they teach at Marshall, but at most business schools, they teach, I think, a lot of nonsense called risk-adjusted return and diversification. As a money manager, if you look at a normal portfolio, most people will make 70-80% of money that year on 2 or 3 ideas, even though they'll have 30 or 40 things in their portfolio. My concept was to put into those 2 or 3 ideas that I had the most conviction in. I was also lucky to travel across asset classes. So I traded commodities, currencies, bonds, and equities. And it gave me the discipline. If I didn't have a good idea in equities, I was happy to have no equities. Or
put all my eggs in one basket and watch that basket. So here's the question, Kris, before I even get into your opinions on the actual announcement. Are you taking any profits this morning?
No. I think Meta's gonna get re-rated much higher. If you look at how much cash flow that was deployed to the Reality Labs section, and then how much cash flow these guys were generating on top anyway, there was a lot of bullishness behind it. So I think a lot of what we're seeing today is, and this is not something hasn't happened in the past. If you guys remember when Zuck was challenged in 2022, he cut the fat where he needed to invest in the things that needed to get invested in, so that this way he could maintain high levels of growth within the company, right? So that's the one thing. I mean, if you look at last year and early parts of this year, he ended all DEI programs and started cutting all low performers. So, at the end of the day, Zuckerberg and he's the largest shareholder of the company. He's the founder. The one thing he's not going to do is let this company flounder by any means, So as much of an ideologue he is when it comes to these passion projects, and I think he'll still invest in the metaverse, don't get me wrong. It's just right now the metaverse is not the most important thing to the market, to shareholders, and to the company. So, it's and believe it or not, guys, everyone who's in the mega cap space, they have to try new things. If you don't try new things, you're going to run into the innovator's dilemma. Your core markets are eventually going to get challenged by newcomers, and the newcomers are going to eat away. Like, I mean, this is the problem with companies like Apple, in my opinion, where Apple's top line growth has basically been flat and they haven't really been investing too much into other things. Now, yes, their cash flows have supported massive amounts of share buybacks, which has provided shareholder returns. But at the same time, in terms of future growth, Apple is there for stability, but they could be challenged, So that's the key. So I think all the mega caps, they have side hustles. Look at Elon. Elon has everything going, but he still has multiple side hustles. Amazon loves failing fast. They try new things all the time. Microsoft does the same thing. Google, the amount of money that they spent on all these side projects.
Yeah.
It's insane. They lose money on quantum. They've lost money on Waymo for a decade. They've lost money on so many things. But the thing is, all you need is that one thing to hit. And what happens? Your next leg of growth is gonna explode. And I think with Zuckerberg, they've really hit the nail on the head when it comes to AI. And they, unlike the other businesses that are still kind of discovering how to generate more profitability, he's getting instant ROI right now. If you look at their cash flow statement on it, they doubled operating cash flow in the last 2.5 years.
Okay, so here's the question then. So AI is giving them an ROI on advertising. That's fair. The street was upset because they don't see anything else besides advertising. At least that was the narrative. Do you think this counteracting of balance sheet efficiency by getting rid of some of the metaverse costs and potentially just putting that into the CapEx, do you think that helps change the narrative that the street was upset about, or how do you think the street's going to interpret this long term?
No, I mean, even from a CapEx perspective, dude, if you look at the transaction that they did with Blue Owl, right? So a lot of people, they saw that and they were like, wow, these guys are headed into the same direction that Oracle is, where they're promising all this CapEx, but the ROI is not there. And I'm like, no, if you look at the deal that they structured with Blue Owl, it's very, very value accretive to shareholders, where basically the one big beautiful bill came in and made it so that you could immediately expense certain things from your CapEx, right? So before, let's say you built a building, right? You would spend the next 30 years depreciating that building at a very low amount every single year. So now you're taking all of this capital and locking it away. The deal that they did with Blue Owl was that Blue Owl would build the infrastructure, Meta would supply the GPUs that Meta could immediately expense as a cost and save themselves a bunch of money on taxes. So no longer do you have to carry these things on your balance sheet for the next 5 years. The amount of income that Meta generates is insane. So they can expense that right away and take the benefit of that cash flow, and they can stay liquid the entire time. And at the same time, because they can stay liquid, they can keep doing share buybacks, they can keep doing dividends.
Yep.
And also remember, the cost for them for buybacks is, the ROIC on buybacks is way better than locking that away in some capital. That's why if you look at all of these major companies, why don't they just go out there and build their own buildings and not pay rent to landlords? Well, that's because that's such a low margin part of their business that they would rather be paying some leasing charges and keep the rest of the money and invest back into the business, right? So I think that's the challenge that I wouldn't say challenge, but that's the thing that a lot of people don't necessarily realize, that the ROIC that Meta is getting on a lot of their AI spend is massive, dude. I'm telling you, look at their operating cash flow. 2.5 years, they were able to take $50 billion in operating cash flow to $107 billion in operating cash flow. And then in another 2 years, that thing, right now, the projections are they're going to do 150 billion in operating cash flow. You tell me what the value of a business is with 150 billion in operating cash flow. And at the same time, their CapEx, while they're investing a ton of it right now, it's going to moderate eventually and get back to a normal level.
No, I agree. And it really does feel like the narrative sort of issue with Google. They had a DOJ issue. But again, the market was discounting them so heavily over something that was so external. And it feels like that's the same thing with Meta in terms of this AI narrative. That's, where's the ROI coming from? And to your point, operating income doubling means the ROI is there. By the way, guys, Netflix reportedly is offering Warner Brothers 85% cash for the deal. That news just broke, which is pretty massive. So the bid that they are submitting to Warner Brothers, 85% of that is cash. Netflix stock is down 1% because the street doesn't love it, but that is the headline. Kris, last question for you. I think this is the thing that everyone's really wondering about in the chat, which is, we talked about Druckenmiller risk management. I mean, look, you're going to be up a lot today. The options are going to print. You like to couple your long calls with short calls. You're probably feeling a lot of excitement right now. How are you as a manager of your portfolio thinking of either profit taking, short calls, spreads, or do you really just think, no, you let this play out for the next 2 years?
No, well, here's the thing. At some point, things are going to get overbought. The market has a way of overselling things, and then the market has a way of overbuying things, right? So I'm going to wait until this thing is a little bit overbought, and then I'll sell some calls at the high end, so that this way I do create a spread, and then I can use that liquidity for other things that I believe have recovery potential. Like this was the same thing that I did last year with Google. Anyone who's been on my Patreon and stuff, y'all know how bullish I was about Google. So my Google position is doing extremely well. Now, that's not to say that, I'm not doing bad on some of the other portions of my portfolio. Like there are a couple of companies that, haven't done the greatest, but at the same time, in terms of total risk-adjusted returns, I'm exceptionally doing really well. So I have my way of, when I see some fat pitches, I will swing at them, and sometimes they really work out well, and sometimes hey, listen, they don't.
But this is also the beauty of the markets, right? You deserve it if you win, but you can't cry if you lose, and that is what makes the stock market so special.
Yeah. I mean, look, I'll tell you the positions that I'm not doing so well. And I have a lot of shares in Next Decade. I have a lot of positions in Venture Global. I have spreads on Fiserv, which started to recover yesterday with all these insider buying. I took some profits on Carnival Cruise Lines, which did well. I have a position in that I literally 4x on Norwegian Cruise Lines, and then this pullback on Norwegian has basically evaporated all of those gains. But I haven't sold a single one of those spreads because I'm like, look, I'm looking at the future. I'm seeing what's out there. So everyone's gonna have their losers, and everyone's gonna have their winners. And sometimes, as long as you understand when things, especially a high quality business, goes on sale, that's the one time you shouldn't be afraid to kind of dig deep and buy stuff. I mean, like I said, everyone's got to develop their own conviction. Everyone's got to develop their own thesis. And sometimes those theses, they can play out well, and sometimes they don't. And for me, today is a good day for me. And I've had plenty of bad days. So I can't say what's that thing called that every day is a good day. I've never met an investor that has nothing but positive returns.
I love it. Kris Patel, thank you so much. Thanks for tuning in and hopping in and explaining this position. A lot of people wanted some analysis on how you're thinking of this Meta position. And I'm sure a lot of people got into Meta because they heard how bullish you were. So super cool stuff. Congrats.
I did that last year with Google too. I got to the point where people were just getting mad at me. They're like, stop posting shit about Google, dude. We get it. You're bullish on Google. And I was like, when I see something really, really opportunistic market, I really do a lot more fundamental research, and hopefully it does pay off. Now, in the short to medium term, listen, sometimes you gotta deal with that fucking pain for sometimes 6 months, a year, maybe even 2 years. I mean, I gotta give you and all the Palantir people a ton of credit, because y'all helped through some of the most difficult parts of being an investor, and that's why you guys are being richly rewarded right now. So like I said, if you have the conviction, stick to it, stay in it, and do well in the markets, and that's all I can hope for everyone.
But it's also really cool. I just want to acknowledge as a community to experience this type of stuff, because I think part of the reason this community has been so special and that people tune into the show every day is because like a hedge fund manager that went long Meta, that gets to go on Bloomberg and CNBC and brag about it, that's like the professional elite world. You're just a regular dude who works a 9 to 5 that does research at night, and then you open source that research to the whole community when the stock was trading $80 cheaper, and people could either agree with you or disagree with you, but now they're seeing the thesis come to light, and we get to see it happen from one of our own inside of our own community, and I think that's just really cool. And hopefully we can keep seeing that over the next decade.
Yeah. And like I said, this is just how the market is. The one thing I will say that I think all of us really do appreciate, one of the things that you started doing and I've been doing more, is doing a lot more technical analysis on entries. I've always been a lot more of a fundamental investor where I look at a company and say, oh no, fundamentally this is oversold, or this company is doing extremely well fundamentally, but I've never necessarily in the past looked at technical analysis as a way to really like juice up my risk or de-risk. But I think I'm utilizing that concept more now ever since he started doing the thing with Jason, where I would be like, okay, you know what, I kind of understand it. I really take a lot more technical analysis, at least to the degree where I want to get better entries, rather than just fundamentally getting into a company. Like, I'll give you an example. Like, I got into Fiserv when it was crashing at 75 because the value is really strong, but I think I bought a little bit too soon. I should have waited until it bottomed a little bit. I saw some recovery on the MACD, but sometimes you can't nail every single bottom, but with good technical analysis, you can get pretty damn close. So like I said, I'm incorporating more technical analysis into my entries and even some of my exits as well.
I love it. Kris, thank you. We'll talk to you later.
Take care. Have a good one.
Later. All right, we got 3 minutes until this market opens. Again, the big headlines of the day: Palantir partnering with Nvidia to launch a brand new product called Chain Reaction to be the de facto operating system for AI infrastructure, aka data centers. Then you had Meta with this, not announcement, but Bloomberg report that Zuck is going to pull back spending on the metaverse by about 30%. And then yesterday, we also had a pretty big announcement with Jensen on the Joe Rogan podcast. So it was, this is the first time Jensen's been on the podcast. Massive, massive deal. Lots of clips going viral from this. The news of last night for Nvidia is that Trump is thinking of getting H200s shipped to China. Now, we've been talking about this headline for a long time. The problem is Jensen came out, or at least some reports came out this morning saying that Jensen basically is saying he doesn't even know if China wants the H200 chips. And China's been very explicit that they want the latest quality chips. There's people in the White House like Marco Rubio that really don't want to sell chips into China. Then you got Trump, realizing, hey, the American economy kind of needs to thrive and Nvidia needs to do well. So maybe we have to allow. So I think there's a lot of nuance between what's happening with China. Regardless of if Nvidia gets China or not, their revenues are on track to beat expectations again, based on what Colette, the CFO, said at the UBS conference yesterday. So I think Nvidia will be okay without it. I did buy more Nvidia yesterday at 180. Again, the simple argument, realistically, I looked at the market. It was like 220. It was like, a couple hours before the market closed. And like Amcor was pumping, which is an Nvidia derivative. Nebius, which was an Nvidia derivative, was pumping. Like things, we had a green day and Nvidia was red. And I'm like, this cannot go on for longer. This does not make any sense to me. So I think Nvidia will continue to thrive. Nvidia right there up 1.24%, probably pumping because of Meta that will likely spend more CapEx on Nvidia. So congratulations if you're in Meta. Jobless claims this morning were pretty good. Didn't have that horrible of jobs data. We don't have any other macro data, at least that I see. We might have a little bit later, but nothing right now. And the Palantir Nvidia partnership, a very big deal. And then you got this Meta news that was super, super important for Meta investors. That stock is up 5%. Now we got to see if it holds. This is the beauty of the stock market. Sometimes you're happy and then that happiness gets stripped away. Maybe that happiness gets even better. But we are going to see as the market opens. It is Thursday, December 4th, 9:30 a.m. Thank you, everybody, for being here. The stock market is now open. All right, wake your ass up. Let's get into it. Meta 670 on the open. That's up 4.8%. It did get to 687 in the pre-market. So I think even holding a 4% move would be pretty exciting for Meta. That stock is now up about 4.9% on the day. Amcor down about 2%. Makes sense. The stock was up almost 9% yesterday. Probably going to take a breather today. That stock right there down about 2%. Apple 284. That's green. Bitmine's down about 1.5%. Tesla. By the way, the Fusaka upgrade happened last night. ETH also pumped to like 3,200, 3,250. Now it's back to 3,170. But we did get a bit of a move based on that upgrade. SPY is green, 685, up about 0.17. Amazon's green, 232. Tesla, wow, 450. Tesla making a move right there. I haven't seen 450 in what feels like a month, right? It's been a minute for Tesla 450. MicroStrategy, that's down 2%. Big Bear AI is down. Macy's is down. Cypher is down. TeraWulf is down. The data center plays. Nebius probably is down. Nebius is basically flat. Iren, which was up 7% yesterday. Iren is now down 3%. Nvidia 180, up 0.6. Meta 663. All right, so Meta's dumping from the high of 687. We're going to see how long this can hold. Still up $25. It was up $50. So in the pre-markets, if you bought at 687, maybe wasn't the best buy. But a lot of volume did come in immediately when that news came out. 665 on Meta. Duolingo, that's up 1.3%. Oracle, that's flat on the day. Celsius, that's flat. Galaxy, that is also flat on the day as we get into it. QQQ, the NASDAQ, we are flat as well. Looks like the market wants to go a bit red. I know it's a minute since we opened, but you are seeing red candles across the board. So we're going to see how much this can hold. Hoodie, Vlad was on CNBC talking about prediction markets earlier in the show. Hood's also flat at 133.51. SoFi, are we getting hit on SoFi? SoFi is down 1.5. SoFi's really been stuck at this 27 to 29 level. AppLovin is green. That stock is moving. Grab, we are red at 522. That's down about 0.5% on Grab. Volume has completely died out on Grab. I mean, this stock was doing, 30, 40 million shares a day. It's now doing like 10, 15 million. So again, I think the announcement for the GoTo acquisition that happens likely in December is what really the street is waiting for. Until then, the stock needs catalyst. And right now, there is no catalyst. And so it's one of those waiting games where until you get that piece of news, that's what's going to change it. But that is the piece of news that I think the street cares about. S&P 685, Hoodie goes green, 134.65. Speaking of catalysts, again, Hood prediction markets is becoming a massive catalyst for the company, re-rating the volatility of the stock because if crypto goes down but prediction markets are up, that kind of offsets some of the revenue as Vlad was talking about this morning. 134.54 on Robinhood. Palantir is slightly red, 175.60. Slightly red, 175.60 on the day. BMNR is flat. No, down 1%, which is not that crazy because ETH is also down 0.4. American Eagle, that's flat. D-Wave had a good day yesterday. It was up 5%, up another 1% right here. Warner Brothers, again, Netflix. Dude, I'm getting more interested in Netflix. I haven't done enough fundamental work on the company to think if it's a buy. If anyone has any due diligence on Netflix, feel free to send it to me. But I really do think if they acquire Warner Brothers, that's a lot of content. And that's really, really valuable content. Now, will the stock tank when they make the acquisition if they're paying like $30 billion? Probably, but I feel like that's the opportunity because, I mean, imagine watching Game of Thrones on Netflix. Like, there's a lot of people that I think are going to subscribe for that content and would be pretty valuable. I should ask Joseph Carlson to come on the show. The only podcast he's done in 3 years was with me back in 2022. I should hit him up and be like, dude, let's do a stream. Let's talk about Netflix. So maybe we'll do that. Now Steve might not like that, but we might have to still do it. Speaking of Steve, Salesforce. Look, Salesforce had a good earnings, but the market just hates this stock. The market just hates this stock, dude. They had a decent earnings. It was not horrible by any sense of the imagination. Agentforce is growing very well, but it wasn't lights out. Oh my goodness, this is the AI revolution for Salesforce. And I think that is kind of the issue that Salesforce is having right here. Snowflake, for some reason, got destroyed. Like, I don't know why the stock is down 10%. I really don't. And I'm not even a Snowflake shareholder. Like, I know there was this rivalry between Palantir and Snowflake years ago, but now Palantir and Snowflake work together. I don't like seeing these AI software names get hit this bad because it makes you wonder what's going on in the AI software ecosystem, right? You want the market to be excited about that. So they put up some really good numbers. I'm not sure what the street is upset about here, but the street is upset about something. The Q's right there, down 0.22. Palantir, 176, that's green. Netflix, 103, that's down about 1%. Salesforce not catching bid. How about Path? Path had their first profitable quarter in history yesterday on a GAAP basis. Path is up 11%. Congrats if you're in Path. That's up 11% on the day, as that is green. Warner Brothers has a lot of overlapping with Netflix in terms of subscribers. That's fair. I mean, I subscribe to both. But I do think in terms of net new subscribers, Netflix would be able to capture, at least 10 million new people, if not more? How many subscribers does HBO Max have? Do they publicly disclose that? $128 million across its services. I don't think we have the specific for HBO Max itself. Yeah, they're going to get a decent chunk of that if they actually make this acquisition. AppLovin, that's up 2% on the day. Amazon goes red once again. The market, this is one of those stocks where, again, I think you buy and you hold for the next decade. And I really do think next year it has a breakout, but it's Amazon. And Amazon's price action has been horrendous, but nonetheless, it's a sleep well at night type of stock. But it's not a stock that's going to move 7 or 8% up or down every day. Robinhood right there, 135, highs of days on Robinhood. Warner Brothers does have a lot of debt, and that's why I think the street's upset about this, and that's why they're selling off Netflix. So, and that's why, you know, I struggle to even think of buying the Netflix dip until I do some analysis on that debt and figure out how is Netflix planning to manage that. Now, rates are coming down, which is net bullish for companies that have a lot of debt because they can refinance it, but still, it is a bit confusing. Good morning, sir. You are live on the Market Open.
Good morning, Amit. How are you?
I am doing good. We were just talking about you as...
You know, I just got a phone call from Tanner.
Okay.
I just got my coffee. He's like, did you see the news? And I'm like, no, I did not see the news. What happened? Do you know what I'm talking about?
I think you're talking about the Palantir Nvidia partnership?
No, I am talking about Meta reducing their CapEx spend on the metaverse.
Oh, of course. How could I not know that that's what... Well, we just had Kris on the show for about 20 minutes explaining that. What is your take as someone who has held Meta for a long time? And me and Kris were talking about you because we mentioned someone did say that if Meta cuts their workforce on the metaverse, that stock's going to be up the next morning.
I said it last night. Tanner's like, how the hell did you know that was going to happen? I said, I didn't know it was going to happen. I just said that if it does happen, and it should happen, this stock is going to explode. And I think I said it on Tuesday night with you also.
Honestly, you've been saying it for like the past couple of weeks because we've been talking about Meta a lot.
I have been saying it for a long time.
Fear and Greed, by the way, at 37. Okay, so Meta's up 5% right here. I guess the question is, do you think this is the right move, and do you think they're going to take that metaverse spend and put it into more CapEx?
I think it's the right move. I need to look into what exactly they're cutting. And just what you said, where are they putting the money?
Right.
So if they're going to say, you know what, Reality Labs isn't working and it's more of a time delay or an engineering thing, we don't need just to keep throwing money at it, we just need to refine it, that's great. Because that means that they can maybe even cut down more in the future, and that's the big loss leader on the negative operating income.
Correct.
So, yeah, this is going to be big.
Do you think the street? So the stock was at 687, now it's at 667. Do you think the street's going to respect this move enough to hold the gains, or you kind of don't care because it's the right move regardless of the stock?
Yeah, it's not about today. Think about it like this: it's December 3rd now. Okay, so we're only going to get a month out of Q4 that this hits the Reality Labs line. This is big for 2026 because now that loss leader on negative operating income will shrink in Q1 and Q2, and it's going to boost operating income. So even if CapEx spend goes up, that's not going to change operating income.
Yeah.
And operating income will get better because not only is Meta generating more of it, they're losing less on Reality Labs. And since that is shown in the deck and that is a big number that people care about, it will propel the stock higher.
Yeah, and Nvidia right here pumping 3%.
So what is the Palantir hook up with them?
Yeah, Palantir's launching an operating system for data centers. It's actually really cool. And
how much is Palantir up?
Palantir's up 1%, and Nvidia is their founding partner on this partnership as well. So,
all right.
Quick question for you, Steve, and then I'll let you go. Salesforce stock's flat. What was your reaction to those earnings?
They crushed earnings. I don't care that the revenue was in line with estimates. They're a $40 billion company that freaking grew their revenue by 9%. Their EPS smashed. They bought back more shares than ever in this quarter. And the big thing was the Agent Force number. It was, and I don't have the report in front of me, and I'm still half asleep, but the ingestion was like 3.2 trillion records or some ridiculous number this quarter
Right.
for Agent Force. And their Agent Force deals grew. Half of them are paid. And nobody can say they're not a player in AI. And all the people that say it's a shitty product and they hate the product, they're not the decision makers about are we getting rid of Salesforce or not. So their opinion doesn't matter. And Salesforce is tied to too many organizations. Nobody's getting rid of it. They're still growing. They're on track to do $13 billion in free cash flow. And it is one of the most undervalued tech companies there is. And next year, it could be a catch-up theme in AI because of how big Agent Force is getting. So I like to go against the grain sometimes. This is the dark horse at 26.
All right. I love it. Thank you, Steve. Appreciate you calling in.
All right. Are you, all right. Have fun later.
Yeah. Talk later.
Later. Bye.
UPS down 2%. Why is UPS down? Because Amazon, according to the Washington Post, is going to be cutting ties with, well, actually, they're cutting ties with USPS, but I guess UPS is falling in sympathy because Amazon might end up starting to take away some business from them as well. That would strip the Postal Service of more than $6 billion a year in revenue, roughly 7.5% of their total. Okay, so you are getting a bit of these. If FedEx is down as well, that could be correlated to that. Amazon, again, they're going to be vertically integrated. I really do think Amazon, FedEx, it's down a little. It was down and recovered a little bit. I think Amazon's going to be a big one in 2026. I don't know if the stock's going to make a massive move, but I just think it's not going to have a 3% year like it's having this year. It's just more and more vertical integration across the board. Microsoft, that's flat on the day. We did have that Microsoft fake news yesterday about cutting sales quotas on Copilot, basically saying Copilot sucks. Market reacted, but I don't think the market cares that much anymore. So Microsoft did deny that report. PayPal, that's down again. The CFO at PayPal at a conference yesterday said the consumer was weak in September, October, and November. So once again, citing a weak consumer. Google right there, that's down about 1.2%. Nike, that's flat. Oscar down 1%. UNH, that's down a little bit. And then CrowdStrike down about 1.3% as well. Micron's also getting hit today. Micron down 3%. Again, Micron is up a lot for the year. So some of these names are just up a ton. And people may be taking their profits. Oracle has earnings next week. Rate cuts are good for their debt. What are your thoughts? You know, Oracle is very confusing to me simply because Oracle up 1% right here. I don't think they deserve to be 350, but I also don't think they deserve to be below 200. Are they going to increase their RPO obligations? Are they going to have another massive like AI deal that is outside of OpenAI to really juice up their numbers, even though their debt is increasing? Their credit default swaps have hit an all-time high on price. I think the market's just confused when the revenue that they say is coming is going to come. And it might take a couple of years. Does that mean Oracle stays flat till that revenue materializes, or do people front run it? I really don't know. Rate cuts are good for their debt, but at the end of the day, you know, their debt is $40 billion. So the street's more upset about just like the velocity of debt they decided to deploy for these data centers. And I think they're going to have to say something on that call that counteracts that narrative and really just highlight the ROI they're getting from all that debt. Tesla right here, 452. Very, very, very exciting to see 452 on Tesla. I'll show you guys this quick video. I showed you a little bit yesterday of Tesla and the robot as doing as well as it did. So this is the progress from May of 2023 to today, December of 2025. As you can see, things have changed. There is the robot literally running. But not only is Tesla getting a robot to run, here's Figure's robot that responded to this. And look at that. Their robot is also in a position where it's trying to do what Tesla's doing, which is basically show that it can be fully functional. I don't know why the video is not loading, but if the video was loading, then you would see the robot running back and forth. So again, the robot wars are heating up. The big announcement yesterday was that the administration, Lutnick said, is thinking of creating a robotic czar, essentially Twitter's just not working. I'll see if I can pull it up on my phone. Essentially someone who is like an AI crypto czar before robotics. And I think that really is bullish for Tesla. bullish for Amazon as well. But if we are entering into the age of robotics, bullish for Nvidia as well, because those robots are going to need chips, then you need an administration that is tailored towards focusing on policies that can help these robots thrive. Just like as Kris was talking about the zoning laws and the expense laws for data centers that were in the one big beautiful bill, you're going to need something like that for robotics, and Tesla would be a core beneficiary right there. Tesla up 1.5% on the day. Here's the video on my phone so you guys can see it. But it does seem pretty cool that this is happening back and forth. So that's what we got there with Tessie. S&P flat on the day. Where's Meta? Is it holding the move? It's holding 3%. Not horrible. Holding 3%. Netflix still down. Bitmine's down 1.5. Palantir 176. Grab at 525. Robinhood 133.65. Oscar's down about 1.2%. Beyond Meat's up a little bit on the day. DoorDash down 1.69. And then Hims, that stock up 3%. Rocket Lab had a major day yesterday. That was up 7%. Rocket Lab continuing that day, 2.24. Nice to see that Rocket Lab and some of the space names like ASTS are also getting some love. ASTS up 4% here. Now, the other piece of news that came from the Financial Times yesterday, which I think is a nothing burger, but nonetheless, it is news. Bond investors are warning the U.S. Treasury of their fear of Hassett being the new Fed chair. So the argument here is that they essentially think Hassett is way too loyal to Trump, and they would rather have Rick Reeder or Christopher Waller or someone who's like dovish, but not like, has just unconditional loyalty to Trump. Which, I mean, look, Kevin Hassett's the National Economic Director. Obviously, he wants to be in the right position in alignment with the administration. If he transitions to an independent position, one could argue, is he really independent? Which is a fair point. But then again, is any position member ever independent? Every political party gets to pick their administration when they're in power. And so I think those are like fears that are healthy, but I don't think that's going to affect Trump's decision on who becomes the next Fed chair. Now, it's not a lock for Hassett to become the next Fed chair, but I don't know if that report in and of itself is going to influence Trump to think of a different Fed chair. CoreWeave above 60 or above 80. CoreWeave getting some love. There you go, 80.88. How about Nebius? We are at 99.30. That goes green. And then IREN still red for the day. By the way, remember those 5X ETFs that we talked about like a month ago, that this company was planning to do like 5X Nvidia, 5X AMD, etc. The SEC apparently came out and they said, yeah, maybe we're not going to allow that. So it's not confirmed yet. They were supposed to go live December 31st. But the SEC, as you can see right here, sent out a letter and they're pushing back on the legitimacy of these 3X, 5X leveraged ETFs. And they're accusing the company that was putting them out as like basically using a loophole that they can't necessarily use to make this a real thing. I actually think this is a good idea. At the end of the day, I think a 5X ETF is the quickest way to blow up an account. And there's already a lot of ways to blow up accounts like 0 DTEs. So I don't know. I mean, maybe it's not the best idea in the world to allow those things to easily be liquid. And I also just think they're going to, people forget the meme stock ETF that came out in December of 2021, it had to shut down in December 2023 because we had a bear market and they failed. Eventually, we're going to have times where like the market's not going to the moon, even if it's not a bear market, if it's stagnant. I mean, even in November, if you were in Rocket Lab that went down 30%, you were 5X leveraged. I mean, like you're done, right? So I don't even know if those ETFs will survive long-term. So maybe it makes sense they don't officially get approved. 182.45 on Nvidia as that is going green on the day. Rushil says I bought Nebius at 30, sold at 50, now creating a position again, starting at 90. Stock Talk, I think this is one of the reasons a lot of people liked his commentary yesterday. And he told me to tell you guys that he loved being on the show and he was super excited to talk with all you guys. One of the things that he talks about a lot is just when you have a cost basis that is super low, being able to defend that position, even if you trim that position, is very important. And not getting rid of the entire position, which is something a lot of us have made a mistake on, right? You buy low and then you sell high. But if there's no real conviction, you don't get the benefit of having a very low cost basis to allow the position to mature so that eventually if there's pullbacks, you don't have to add on those dips because those dips aren't actually dips to you. They're still multiples above your original position. So I think with Nebius, a lot of people definitely feel that given they bought low, sold high. Obviously, I got in pretty late on Nebius, but nonetheless, I do think the upside for that going into next year is pretty strong, and that should be a stock that plays out if the data center thesis also continues to play out. Google right there, 316, that's red. You're seeing the entire market start to go red. There's pockets of green, but most things are starting to sell off a bit more. S&P, yeah, S&P goes red, 683. S&P goes red right here, 683.22. Do we have any other macro news coming out in 10 minutes? We have the jobless claims. Do we finally get jolts today? Do we get jolts? We do not get jolts. No, I think that's pretty much it. We had jobless claims. We had the November layoffs, which was 71,000, the highest in 2025 since the pandemic, which means the labor market probably is weakening. But that should be the data that we're getting today. OpenAI, a bunch of different headlines on these guys. Oh, I got to play this clip for you guys as well from the Anthropic CEO. I think he had a really, really good clip on what's going on with data centers and the investment that they're making. And he's subliminally calling out OpenAI without actually calling them out. But there was a couple announcements yesterday for OpenAI. Number one is that apparently Sam Altman wanted to build a SpaceX competitor. And every time I see these types of headlines, I just kind of feel like he's getting desperate because, like, really, you're going to compete with SpaceX? I mean, that's not easy to do. And you already have a hard enough job proving to the world that OpenAI is not a scam. And I don't mean to say that in a negative way. It's just, hey, 20 billion in revenue, 1.4 trillion in spending. I mean, you got a lot to prove to make sure that OpenAI works out. And now you want to build a rocket company that has data centers in space. I mean, like, you probably got to build the data centers in Texas first. And you got to prove you have the money to build those data centers because right now no one knows where the hell the money is coming from. So I do think you have a lot of random things happening with OpenAI. And yeah, you had that whole co-red controversy that came out over the past couple of days. They delayed their ads product to be able to work on Gemini. I think there's a lot of questions more than answers on OpenAI. Here is Dario. He's honestly one of my favorite LLM CEOs. I think the way that he communicates about this stuff is very well nuanced. Here's his response. It's about a 2 to 3 minute response around AI spending, how his company is growing, and ultimately the future for where he thinks the data center space is going and how much capacity is actually needed and how that capacity matches the revenue that these companies are trying to spend.
Now, I mean, it really does represent potentially almost all of the growth in the United States GDP right now, literally.
Yes.
That we are in some form of a bubble. Are we overspending? Does the math of all of this make sense?
So this is really complicated. And I want to separate out the technological side of it from the economic side of it. On the technological side of it, I feel really solid. I think I'm one of the most bullish people around, and I think it pencils out. On the economic side, you know, I have my concerns where even if the technology is you know, really powerful and fulfills all its promises, I think there may be players in the ecosystem who, if they just make a timing error, if they just get it off by a little bit, bad things could happen. So let me go through both of them. On the technological side, the reason that I'm not honestly, by the pure technology, not that surprised is myself and some of the people who eventually became my co-founders, we were the first to document the scaling laws of AI, which is you put more compute, you put more data into AI with small modifications. We've seen these things like reasoning models and test time compute. They're all tiny little tweaks. And I've been watching that trend for the last 12 years or so since I joined the field. And the thing that is most striking about all of it is as you train these models in this very simple way, you know, with a few simple modifications, they get better and better at every task under the sun. They get better at coding. They get better at doing science. They get better at biomedicine. They get better at the law. They get better at finance. They get better at you know, materials and manufacturing. And that's just a listing of all the sources of value in our economy. If I just take Anthropic itself, which because we work so much on the enterprise side, I think we're a good barometer, maybe a purer barometer than the others, which kind of filter through consumers, which kind of have their habits and their use cases. We look at our revenue, it's grown 10x a year, every year for the last 3 years. 0 to 100 million in 2023, 100 million to $1 billion in 2024, 1 billion to it's going to land somewhere between 8 and 10 at the.
That right there as well, I just want to highlight, when everyone says AI is a bubble, this guy has 10x the revenue of his AI company every year for 3 years in a row. I mean, again, I don't understand how you can generate that type of growth if all of it is fake. You can say some parts of it are overvalued, but you cannot say that it's fake, there's no use case, and that it's just not real.
The end of this year. Will it continue? I don't know, but the technology is driving there and the economic value is coming with it. It will, that trend is going to slow down for sure, but it's still going to be really fast. And so I have this confidence that eventually the economic value is going to be there.
But let's just go to this, because there are companies that are spending $100 billion a year more. You're going to be spending 50. You look at what Sam Altman, who was here last year, plans to be spending. These are extraordinary numbers. And this is all a big bet that this is going to scale in this way. And my question is there a real way to pencil this out, or is this more of a gut feeling at this point?
So so that really gets to the second part of it. And I will describe as transparently as I can. I think there's a real dilemma deriving from uncertainty in how quickly the economic value is going to grow and the lag times on building the data centers that drives it. So I think there's genuine uncertainty, there's genuine dilemma, which we as a company try to manage as responsibly as we can. And then I think there are some players who are YOLOing, who pull the risk dial too far, and I'm very concerned.
Who is
AKA OpenAI.
YOLOing?
So that's a question I'm not going to answer. So on the first one, put yourself.
We'll come back to that.
Put yourself. We won't. Put yourself in the position of Anthropic. Put yourself in my position. You've seen this revenue curve that goes up 10x a year for 3 years. You're like, okay, what's going to happen next year? If I'm really dumb and I extrapolate the pattern, 10 to 100 billion. I don't believe that. Just to be clear, I don't believe that at all. Even though it's happened in the last 3 years, just at this scale, I don't believe it. But that's one of the outer bounds of, the outer limits of possibility. If I go in and I'm like this enterprise and that enterprise and this use case and this is our go-to-market motion, if I try and do it, bottom up, then maybe it's 20 or 30 or something like that. So there is what I've been calling internally this cone of uncertainty, where I don't know if a year from now it's going to be 20 billion or it's going to be 50 or like it's very uncertain. I try to plan in a conservative way, so I plan for the lower side of it. But that is very disconcerting. And you add to that the idea that building the data centers has a long lag time. It's like a year or two. So I have to decide now, literally now, or in some cases a few months ago, how much compute I need to buy in early 2024 to serve the models in early 2027 when I get to that revenue amount. And there's two coupled dangers. One is that if I don't buy enough compute, I won't be able to serve all the customers I want. I'll have to turn them away and send them to my competitors. If I buy too much compute, of course, I might not get enough revenue to pay for that compute. And in the extreme case, there's kind of the risk of going bankrupt. And how much buffer there is in that cone is basically determined by my margins. If I have 80% margins, I can buy $20 billion of compute, and it could serve $100 billion of revenue. But because the cone is so wide, it's hard to avoid making a mistake on one side or the other. Now, we've been a relatively responsible company. And I think because we focus on enterprise, I think we have a better business model. I think we have better margins. I think we're being responsible about it. But again, let's say you have a different business model. Let's say you have a consumer business model,
AKA OpenAI.
Your kind of the source of your revenue isn't as good. Your margins aren't as certain. And let's say you're a person who just kind of like constitutionally just wants to YOLO things or just likes big numbers. then you may turn that dial pretty far. And so I think there's a real underlying risk. Whenever there's uncertainty, there's a risk of overextension. We all face it.
Look, I thought that was one of the best explanations I've seen from a foundation model LLM CEO on the balancing of risks between overspending to be able to, or spending enough to be able to have the capacity to generate the revenue, or overspending to then eventually have the fear of essentially being in a bubble, right? Because if you're having all these worthless data centers because you don't need them, that's a bad thing. And it's a very hard problem to navigate. It is a problem that the bulls think will be to the upside of more data centers leading to more revenue. And the bears say that there's too much spend and none of it's actually going to materialize. Someone's going to be right. Someone's going to be wrong. But I think he laid out the case really well. And I think the difference here with Anthropic, which is honestly why, like, I don't know if OpenAI went public today and Anthropic went public today. I think Anthropic's the better buy just because OpenAI does not have the type of enterprise business that Anthropic has. And they're both growing really fast, but enterprises are really sticky and stable. Consumers are not. And so the question then becomes which one has better operating margins that can actually put up the money to pay for this compute. Now we'll see whatever new products OpenAI comes up with. And, you know, ChatGPT, I just subscribed to it the other day because it's just such a better consumer model. But these are the AI wars. I think Nvidia ultimately wins along with AMD and Broadcom and all these other guys. But the question is how these use cases develop over the long term. We do have some factory orders data for September. This was delayed because the government shut down. Let me pull this up real quick. We did get jobless claims in the morning. So let's take a look at this data and then we will keep going from there.
Hi, Carl. Indeed, we're looking at our September reads on factory orders and our final September reads on durable goods. Factory orders expected to be up 0.3 for September, still playing catch up on the data. Comes in a bit light at up 0.2, and last month's robust up 1.4 retains a lot of its strength. It's revised to 1.3. If you strip out transportation, still pretty solid, up 0.2, and that follows a minus 0.1. That was a revision from positive 0.1 to minus 0.1. Now, durable good, this series, as I said, our final reads replacing mid-month read, and the replacements, well, exactly the same. Up 0.5% remains, and if you strip out transportation, it improves to up 0.6, same as mid-month read, and both capital good orders, non-defense XR, and shipments, both up a very robust 0.9, same as the mid-month read.
All right, not too bad. 10-year is relatively stable. S&P not reacting too much to it. We'll talk about the layoff news and jobs data in just a second. We discussed it in the morning, but we'll get a little deeper into that. ASTS right there, that's up 6%. Rocket Lab continuing to move. Micron's down. Oracle's up. Nvidia up about 1%. Meta, are we holding the move? Meta is up 4%. Again, Meta reports are saying they're going to lay off a bunch of people in the metaverse sector of the business, or at least stop spending as much on the metaverse by up to 30% as per Bloomberg. That's why Meta's up. By the way, Mexican president says she will travel to Washington on Thursday, which is today, to meet Trump and Carney. I guess the Prime Minister of Canada is also coming to DC today. So Canada, the United States, and Mexico will be meeting here today. S&P basically flat at 683. That's what we have here. FMC, thanks for the super chat. Is OpenAI a threat to AMD shares with the ties? Look, I've been saying this for a while on AMD, which is that the only reason this thing pumped as aggressively as it did, and it's not to undermine any part of the business, but it was stuck at 150 until the OpenAI deal was announced. So yes, I think there's a massive OpenAI threat on this stock. But then again, you've got to trust that OpenAI is going to come through with the money. And if they don't, like, is it a death nail for AMD? No, like AMD will still survive. But if they miss out on that 80 billion of revenue from OpenAI over the next 5-10 years, like that's not good. Now, granted, they're giving up 10% of their company to get OpenAI to give them that money. So the entire deal was interesting to say the least, but it helped the stock. And as Lisa Su, as a CEO, you know, she needs to deliver shareholder returns, and it gave some massive shareholder returns. The question now becomes the legitimacy of if that money is going to come, which is why I think even if you hate Sam Altman, you kind of have to be bullish on OpenAI. Like they are still a central linchpin in regards to all these different companies that are making deals with them. And that is important. Putin is in India today. Do we have a quote from him? Yes, Putin to India today on how Trump might react. Neither me nor Modi, despite external pressure, have approached collaboration to work against someone. Well, Trump's not going to be happy that Modi's going to Russia. Yeah, there he is. Again, India buys a lot of oil from Russia. Trump doesn't like it. Now, if I'm not wrong, a month ago, Trump did a press conference and said that Modi would stop buying Russian oil. I don't know if that's necessarily happening. I think a lot of people were skeptical when he said that a month ago, because India has a lot of people and those people need energy and they need cheap energy. So not sure if that's going to change. Yes, I say Putin. That's how I say his name. It is what it is. It's crazy because that should be theoretically an easy name to say, and I still mess it up, which is, I guess, just how it operates. Kroger had earnings today. This is a grocery store. Kroger stock, ticker symbol KR. They are down 5%. EPS, they beat. Revenue, they missed. Revenue miss, EPS beat. Guidance is a little better than expected, 480 versus 477. Kroger stock down 5% right here. Let's get a little bit of an update on the state of the consumer as well, as we've been talking about this narrative a lot. American Eagle obviously had some really good earnings for the consumer. And then we'll keep going from there.
Is going to cut interest rates to get ahead of the labor weakness, and all of that bodes well for.
That's the playbook, right?
So we did get some commentary, and I just wanted to highlight from consumer companies because it's been a big week for executives speaking at conferences. Let's hear what the consumer is doing based on these companies. Coca-Cola at a Morgan Stanley conference. If the consumer is under pressure, it's not everyone everywhere at all times. I thought that was such a good way to put it. It's something we've been talking about a lot. The top half of the income pyramid is actually in good, robust shape. And then they go on to say the low income is not. And we're seeing that manifest in smaller basket sizes, say at the grocery store. Estee Lauder. It is clear that the U.S. consumer is price sensitive in this moment in time, is resilient, but is price sensitive. Again, sort of speaks to that dynamic that we've been talking about. Value driven, choiceful, price sensitive, but resilient and still spending. And I'll just leave you guys, Carl, with MasterCard at the conference as well. Divergence between soft and hard data. We all read the headlines and some of the survey results around consumer sentiment. We know University of Michigan, for instance, has been very bad, gloomy, according to the MasterCard executive. But what we see in the hard data continues to be very supportive of consistent spend metrics. Watch what they do, not what they say.
Yeah, I guess I would throw in Marriott today too. Expect Q4 RevPAR to be more at the lower end of the range than we gave for 1 to 2 for Q4.
So once again, the divergence argument on consumer, on the state of the consumer, continues to be the headline, which is that some companies are saying, I mean, PayPal yesterday said it's weak. And then you got Coca-Cola saying, well, some parts are weak, some parts are not weak. Uber and Affirm said the consumer's fine. Disney said they're fine. I mean, Starbucks and Chipotle said they're struggling. So I guess we're going to need a few more quarters to really develop a trend on if this consumer weak narrative is legitimate. My personal take is I do believe the consumer is weak. There's no way one can say the consumer is not weak based on all the jobs data we're looking at. The extent of that weakness is in debate, and that really will affect the market next year because the extent of the weakness determines how much disposable income is left to pay for goods and services, which ultimately will affect company earnings. Yeah, it could just be a PayPal and Chipotle problem. By the way, Waymo's coming to Houston. Waymo is coming to Houston, just announced. I think they announced like 3 cities yesterday, if I'm not wrong. It's almost been like 8 to 10 cities over the past month on Waymo, which is quite incredible on the expansion. VRT, another data center play, that is up about 0.25%. So a lot of the data center plays at least holding some of their green today. UPS still down about 2%. Okta, that's up a little bit. Salesforce, I agree with Steve. They put up a good quarter. I'm very surprised the stock is still not making a move. I mean, I had a feeling it wouldn't, but it's down 30% year to date. You would think any level of good Agentforce stuff would get it to move, but it was just not enough on a day like this. Philly, Baltimore, Pittsburgh, and St. Louis were announced yesterday for Waymo. It's pretty incredible. These guys are continuing to expand. The consumer is okay until the stock market tanks. The bull market has to continue, or else. Yeah, look, we've talked about this argument a lot, which is that the K-shaped economy needs the upper end of the consumer to keep spending, which means they need to have asset prices continue to go higher. And again, I think Trump knows this. By the way, there was another headline yesterday that says Trump is thinking of making Bessent not only his Treasury Secretary, which he already is, but his top economic advisor, if Kevin Hassett, who is the current top economic advisor for Trump, if Hassett becomes the next Fed chair, then Trump is considering making Bessent the next top economic advisor. I think Bessent's already like a very influential figure to Trump. I mean, Bessent was talking about how Trump calls him in the middle of the night almost every week. But this would solidify Bessent and Trump basically running the economy if Hassett becomes a Fed chair. So whatever Bessent says and the way they think about the economy is definitely going to be very important. And the way they think about the economy is growth at all costs. So for all of us that are investors, that's kind of what you want to hear. And growth at all costs means that the market can't have a down year. Now, could it technically have a down year? Of course, but from the administration's perspective, they really can't have it. They cannot have an S&P down 20%. Like that's just, because a lot of stocks are going to be down, much more than 20%. They can't have that happen. We don't have the capacity to pay for all the debt and to manage even a little bit of our deficit if we have negative quarters, multiple quarters in a row of contracting GDP. It's just not possible. Which again, regardless of what you think about the economy, state of the consumer, recession, I think that narrative in and of itself is a Trump put, Fed put, whatever you want to call it, on the market. Tesla right there, 449, which theoretically means one should be long versus not. I only have Amazon stock, not options. I'm a little scared for options going into next year. I do not have the balls that Kris has to put $1 million into freaking Meta options. No, but I don't have 750,000. I have 1.2 million. Goodness, dude. Well, I'm happy it's working. I'm happy because Kris is a good friend of mine, and I would really want this to work for him. So, I'm scared of options next year. I'm scared of a lot of volatility next year. I want to be long, but I don't want to be leveraged long to the point where, like, I need to depend on a strike price and an expiration. So I would just be buying Amazon stock. Path, big move on Path, 17.3. Wow. If you took a swing at this for earnings, 18%. Congratulations. First profitable quarter. I didn't know they weren't profitable. If I knew Path had a chance to produce their first GAAP net income positive quarter, maybe I would have even taken an earnings swing at this thing, because immediately when you become profitable, the narrative changes, especially on a GAAP basis. So that is really strong for Path. And again, this goes back to Stock Talk was saying yesterday. A lot of the stock market is how much information do you know? Like I didn't look into Path. I didn't know that they were very close to being profitable. If I did, maybe I would have been like, all right, let me buy 100 shares and just see what happens if they become profitable. Like even that information alone could have made a trade. But a lot of this is just, what information do you have? What information do you not have? ASTS, 8%. That one getting another move right there, 8.3. Space Mob continues to have this stock normalize in the 50 to 60 range. Austin says, I'm going to appear in a midstream and make him buy Amazon calls. The other thing that Stock Talk said yesterday was important for everyone who's trying to buy like these Amazon $300 leaps. Amazon doesn't need to get to 300. It needs to get to 300 plus the premium you're paying for the leap. Like people forget, like it's not just the stock has to get to the strike. It has to get to the strike plus your premium, which means your break even might be way more. So buying closer to in the money calls, I do think is a strong strategy if your conviction is strong, but your conviction is not like unbelievably unwavering strong. So when I bought Hood options at $25 strike when it was at $8, the conviction was just like real. Like I have conviction on Amazon. Do I know for sure it's going to freaking 300? No, there's no way. Amazon, wow, 228, below 230. Especially given the volatility in this stock is not really like a lot of the other high beta names. It'll move up and then it'll gap down immediately and it won't really hold their gain. So I do think stock over options is not the worst idea. APLD, that's up 2%. Verizon getting a little bit of a move. Let's look at the heat map today and see what's green and what's red. Yeah, in the money leaps are more responsible degeneracy. you could say. We are, let's see. We are red, but green in financials, industrials, consumer durables. Tech is red. Healthcare is also red. Meta and Nvidia are the only real green names in technology. Red Cat, that's up 4% of the day. They had a pretty good earnings last week. So Red Cat is also up, and that is green. Getting some momentum there. Reddit as well, down 2.3%. Another high beta name that's down as that one continues to go red. AppLovin, that's up 2.49%. Robinhood, 134.30. And then Amcor. Amcor holding on to the 40s, dude. I mean, the fact that it's normalizing the 40s, I think is really nice to see. This thing almost hit 44 yesterday, so that's not too bad. Symbotic is down 15% because they had an offering yesterday. And so even the robotics news from the administration was just not good enough for this one, as this also came down. FMC, thanks for the super chat. Buying more Grab. This is ridiculous. Yeah, look, I mean, the thing about Grab, and a lot of people are asking, like, what is the update? The problem is there's no news. There's no, as Kris was saying, sometimes there's a dog day. There's dog days or dog months on a stock, and there's no news. There's like nothing to report. If there was, I'd be reporting it. The only news we had in the past week is that they have a new board director. And so sometimes when there's not news, there's not much you can do other than wait. And that's when you have to ask yourself, do you trust and have conviction in a story that you think is going to play out? And either you do or you don't. And what I will say with Grab is, again, there's a lot of other names that have a lot more volatility. And so if you kind of don't want to be in something that is stuck, that's okay. But if you think it's stuck inappropriately and eventually that will be re-rated, like, you know, many other names that have been stuck before, then that's a decision that people have to make. We have some coverage right here on this metaverse news. Let's pull this up and see what the sell side is thinking about what Zucks might be doing for the metaverse.
Head of technology research for his take on this. So, Gil, how do you think about it in terms of magnitude of spending? The market's, you know, added about 100 billion in market cap to Meta this morning in response.
Yeah, if they shut down the Reality Labs business, earnings would go up by about 25%. They lost $18 billion last year. And let's not forget, the business is there for a reason. Mark Zuckerberg wants to own the next platform. The next hardware platform, in his eyes, will be a combination of glasses and goggles, not a handset. And he doesn't want that to be owned by Apple and Google anymore because he has to pay them 30% off the top. That's why he's been investing so much over the years in Reality Labs. But what's happened is he's realized that AI is much further down the road than the shift to the hardware platform. So he would rather invest in winning in AI and building data centers to support his research and better frontier models and better chat than invest in the hardware platform, which may take longer to play out. That doesn't mean we're not going to get better Ray-Ban glasses and Oakleys and the display glasses. It just means that he needs to shift some of those resources to AI because AI is incredibly competitive with Google, with OpenAI, with Anthropic, and to some extent with Amazon, Microsoft, and many Chinese players. So that's what he's doing. He's moving chips from Reality Labs to the AI investment.
That would imply, though, that he's not going to let all the money fall to the bottom line that they're not spending on metaverse, right? I mean, I know we don't know granular details here, but it would suggest that, you know, essentially padding out the AI investment budget.
Well, that's right. That's why investors were disappointed when they reported the quarter. They reported 25% top line growth in the quarter, which, by the way, is almost twice as much as Google. It's faster than Microsoft, Apple, and Amazon. And the stock was down because they commented about increasing CapEx and operating expenses even faster than that next year, meaning lower margins and not as much earnings growth. So investors reacted badly to that. And as he's done in the past, he's realized that in order to keep the share price going up, he needs to moderate that. So he needs to move some resources from Reality Labs to AI so he can maintain margins into next year and can continue to grow earnings at the rate of revenue growth, which again is a very healthy revenue growth.
Where does Meta sit right now in the in the horse race that is becoming AI. There's certainly a top spender, but what's their leadership position right now?
Oh, they're far behind right now. Let's not forget, 2 years ago, Llama 3 jumped to the head of the charts as the best open source model. But then earlier this year, Llama 4 was a colossal disaster. That's why he's increased his investment both in data centers and in talent, because they are out of the race right now. Again, the top of the leaderboard is Gemini, and very closely after that, OpenAI and Anthropic, depending on what benchmark you're looking at, with the Chinese catching up very quickly, and Meta's nowhere to be found. They're not in the top 25 as far as our rankings are concerned. That doesn't mean that Llama 5 won't start catching up, but that's how high the stakes are.
But beyond just the capability on leadership on their models, what about on the future revenues, right? As the market has now become obsessed with when it happens, how it happens. Like there's always this question, right? Because unlike an Alphabet or even an Anthropic and an OpenAI, now they're not in the enterprise in any meaningful way besides advertising. So what is the vision there? Obviously, they're making a ton of money on advertising and they're monetizing the AI with that business. But is there another story there when it comes to enterprise and the AI payoff?
There could be. So first of all, to your point, they're selling more ads and they're selling them at a higher price. That's why they're gaining so much share in digital advertising. Again, growing twice as fast as Google in digital advertising. They are the share gainer because they're using these capabilities to sell more ads, sell them for a higher price. The plan is for AI, at the very least, is to compel consumers to stay even longer in their apps. If you're using their chat to ask for advice, so in the Instagram search bar, you're typing questions, asking for advice. What should I say? What should I tell them? Should I contact this person?
So here's the question, and this is the more bearish case for Meta. How many people actually think on Instagram you're going to search for a recipe and you're going to use their inbuilt AI? Like, is that going to be the de facto way consumers interact with Meta AI? Because that's a big deal if, billions of people start asking queries. That's what ChatGPT and Gemini are trying to do. Instagram already has users, but will it result in that type of a consumer behavior? And I think that's really a question the street is thinking heavily about.
The types of questions people are asking in Instagram that keeps you in the platform longer, more ads, higher price ads. There's also the possibility that at some point they start selling their capacity elsewhere. Let's not forget Amazon, Microsoft, Google, when they're building data centers, it's because they have 3-year contracts with companies to sell them that capacity. Meta's investing just as much for their own internal use. At some point, when they have strong enough models and they don't have to use that capacity to train, they could turn around and sell that capacity and start competing with Microsoft, Amazon, and Google. That's why Mark Zuckerberg isn't worried about overinvesting, because he knows that capacity will be valuable beyond just training his own models.
Yeah, which is, obviously where AWS came from.
I think that's the question. That's the question for Zuck. So if this metaverse spend just goes into more CapEx, super bullish, the chip names, then the question just becomes, can Zuck monetize it and get consumer behavior to be on his side? And again, if consumer behavior doesn't get on his side, but the advertising is still good, the street is going to keep asking the question, what is the next product besides advertising? And I think that's what Zuck is trying to figure out. Now, the other update on Meta, by the way, Rock Lab and ASTS really making a move. I'm trying to see the headline for space, but space stocks are going up heavily right now. Zuck said this yesterday. Today, we're establishing a new creative studio in Reality Labs led by Alan Dye, who spent 20 years leading design at Apple. The new studio will bring together design, fashion, and tech to define the next generation of our new products and experiences. Our idea is to treat intelligence as a new design material and imagine what becomes possible when it is abundant, capable, and human-centered. We plan to elevate design within Meta and pull together a talented group with a combination of craft, creative vision, systems thinking, and deep experience building iconic products that bridge hardware and software. By the way, the guy that they got from Apple was one of the chief design architects for the Vision Pro. So it seems like Zuck is quite literally telling everyone that their next big thing in AI, or like intelligence as he's defining it, is going to be a hardware-focused intelligence experience, which again, if you hit that, you hit the jackpot, because theoretically could replace the iPhone, but the question is, can they do that? ASTS up 9.5 right here. I don't see a headline on this one. If anyone has it, let me know. Cactus, if you see something on the space names, you can send it, but I don't see anything too crazy. All of these names getting a move though right here. ASTS up 9%. That's a big move, dude. 9%. Rocket Lab up 4 on the day. Headline for space: Altman is looking to buy a space company. Maybe that could be the headline. Definitely is a chance the market could be interpreting that in a certain way. I do think I have something I can pull up on this. Let me see if I have it here. Okay, let's pull this up right here. There was some contract with Rocket Lab, I think, that came out yesterday. Rocket Lab. Yeah, let me pull this up right here. This could actually be the reason for Rocket Lab, and I don't know if this has an impact on ASTS as well. But I don't know if this is confirmed Rocket Lab or not. Is it? Yes, it is. Okay, so legal business name right there. You see Rocket Lab. So this is the contractor shall develop Gen 1 solar sail mission concepts that will address the objectives of the future implementation plan in accordance with the manifest requirements, unique vehicle capability assessment, and future space technology integration study demonstration alignment with flight opportunities, projective or program objectives and goals. Solar and space. Maybe that's something. Erwin says that is an amendment to the contract. I have no idea what that contract is about, but that could be something that's getting the market at least to think a little bit more deeply about their 2026 opportunity. You guys saying ASTS insider bought shares? Oh, well, that'll do it. He's really buying shares after a 2x in his stock? I mean, that would be pretty bullish. If he is, let me see if we have a different headline right here. Rocket Lab right there, 46.81. Again, Meta's pumping on that news of cutting back the metaverse spend for those that are just joining. I don't see any other crazy headline on these names. Don't see them today. So we'll see if we can get more details on it, but that one is moving heavy. Rivian right there, 1756. That's green. Rocket Lab, that's up 5%. ASTS up 10%. UiPath up 18%. My goodness. Salesforce now up 2%. Nebius up a little bit. S&P still flat on the day. And Nvidia at 181. ASTS FM1 launch on 12/15 in India. Okay, but did the market know that they were going to have this launch? Is that like new news? Because if it is, then maybe that's the reason. If it was already priced in, then maybe not. The Verizon ASTS stuff has been news for a while. Rocket Lab made the list to compete for $151 billion in Golden Dome task orders. That actually could be. I mean, everyone knows that Rocket Lab is trying to be integral to the Golden Dome. They've mentioned it many times on different interviews. So that could be big as well. USA Rare Earth, that's up 7% as well. Some of the rare earth stocks getting back into favor. MP Materials 50 and 96, that's up as well. Amazon continues to get hit. Don't understand. Even after that AWS event they had 2 days ago, I'm very confused why Amazon is getting hit as badly as they are. Rocket Lab won AWS Company of the Year last night. Really? Dude, there's a lot of good headlines for Rocket Lab. Yeah, Rocket Lab, AWS Company of the Year. I don't know if that's why it's up 5%, but definitely doesn't hurt. Okay, there you go. That's another thing we got there. Okay, so let's pull up a couple of other different headlines that we're looking at. 1030 right here. Let's see if we get this 1030 slam. Haven't seen a ton of volatility yet. Costco had some really good sales data yesterday as well. Costco, are we up or down? It was up like 8% year over year, beat expectations pretty heavily. Costco is down 3%. You don't see a 3% move that often on Costco. I mean, the sales orders, I think this was for the month of November, were really good yesterday across Canada and the United States. But you have Costco. You have Costco taking a hit right here. Okay, so let me pull this up. So let's look at a couple of these clips from Jensen on the podcast, because there was a bunch of different things going on. For all the people that are bullish in nuclear, here is Jensen's take on where energy may be going over the next 5 years.
Is my point.
So currently that is a big bottleneck, right? Is energy.
Yeah, it is the bottleneck.
The bottleneck.
Yeah.
Is this so? Was it Google that is making nuclear power plants to operate one of its AI factories?
Oh, I haven't heard that, but I think in the next 6-7 years, I think you're going to see a whole bunch of small nuclear reactors.
And by small, like how big are you talking about?
Hundreds of megawatts. Yeah.
Okay. And that these will be local to
That's
whatever
right.
specific company they have.
That's right. We'll all be power generators.
Whoa.
You know, just like your, somebody's farm.
It probably is the smartest way to do it, right?
And it takes the burden off.
cleanest.
Yeah, it takes the burden off the grid. It takes, and you could build as much as you need, and you can contribute back to the grid. Is my point.
So current.
I mean, look, if you're an Oklo, SMR, a lot of these names have pumped on the narrative that there is a shot that, nuclear is going to be the future. And it seems like, based on even what Jensen is saying, even if it's 5 to 10 years out, we're going to need energy from somewhere. And that might happen from nuclear. Here's the other clip from the interview that I thought was important. This was Jensen describing the first time someone ever wanted his supercomputer. And that person happened to be Mr. Elon Musk.
When I announced this thing, nobody in the world wanted it. I had no purchase orders, not one. Nobody wanted to buy it. Nobody wanted to be part of it, except for Elon. He was at the event, and we were doing a fireside chat about the future of self-driving cars. And he goes, "You know what? I have a company that could really use this." And I said, "Wow, my first customer." And so I was pretty excited about it. And he goes, "Yeah, we have this company. It's a nonprofit company." And all the blood drained out of my face. I just spent a few $1 billion building this thing. It cost $300,000. And, the chances of a nonprofit being able to pay for this thing is approximately zero. And he goes, "This is it's an AI company, and it's a nonprofit, and we could really use one of these supercomputers." And so I picked it up. I built the first one for ourselves. We're using it inside the company. I boxed one up. I drove it up to San Francisco, and I delivered it to Elon in 2016. And I walk up to the second floor where they were all kind of in a room, this smaller than your place here. And that place turned out to have been OpenAI.
It's not really nonprofit anymore, though, is it?
They're not nonprofit anymore. Yeah.
Weird how that works.
Pretty cool story. Now everyone in the world can't get enough of these chips. And in the beginning, I mean, talk about humble beginnings. Jensen had no one who wanted the chips other than Elon. Elon saw the use case. This is why Elon is Elon. And now, everyone sees the use case and they can't get enough of these chips. Nvidia right there, 181.73, as that one still is green on the day. Bloom Energy, look at that, 7% move on Bloom. The energy names continuing to catch a bid. And Space Mob, ASTS, 12%. If it's because of that India launch news, then I guess that's the headline. But ASTS right there, getting some love along with Rocket Lab. ASTS did get an upgrade, but that was a week ago on November 24th. Yeah, I mean, seems like that could be logic for it. EOSC, so unfortunately we weren't able to do the equity edge on Twitter Spaces yesterday. I'm sorry, the Twitter just bugged out, bro. Like, we restarted it twice and people couldn't pitch their stocks. But someone did pitch EOSC last week, and it is a very compelling story. I will say I really have not had time to go into it. The multiple is expensive, to say the least, but it's one of those stocks where, if you really believe in the story, multiple can't be the only reason you don't get into it. But that stock as well, up 8.4%. Oklo up 5.7%. And then SMR is also up 5.7%. Energy and data centers not slowing down. Amit, do you think a slight decrease in CapEx projections is coming from the data I've looked at? Because I can't have an opinion on this outside of looking at the reports that I've read. And I think the one I showed 2 days ago was from Morgan Stanley. No, the answer is I don't think these companies can afford to do a slight decrease. I think Zuck's literally said today we're cutting metaverse spending to spend more on CapEx. That's not confirmed, but that's what we're thinking, right? So I think the CapEx spend continues, and that's why I played that clip from Dario. It's a nuance of how long can it continue and how much revenue can you give attrition to the CapEx from showing that it's actually having a meaningful impact. And that's a really tough game, but it's a game that all these hyperscalers have to play as the S&P turns green on the day. So until we get a real report, not the information putting out nonsense, but like a real report that says Microsoft is pulling back spending, Google's pulling back spending, the spending probably continues. And in fact, speaking of spending, I mean, this is Sundar on Fox the other day talking about how they want to spend to get data centers into space.
I mean, over time at Google, we're always proud of taking moonshots. You mentioned Waymo earlier. You know, that's been over a decade in the making. We're working on quantum computing. In that spirit, one of our moonshots is to how do we one day have data centers in space so that we can better harness the energy from the sun? You know, that is 100 trillion times more energy than what we produce in all of Earth today. So we want to put these data centers in space, closer to the sun. And I think we are taking our first step in 27. We'll send tiny racks of machines and have them in satellites, test them out, and then start scaling from there. But there's no doubt to me that a decade or so away, we'll be viewing it as a more normal way to build data centers.
Well, and someone.
Again, you got the market saying, oh, this is a bubble. And then Sundar's like, yeah, in a decade, it will be normal to have operating data centers in space because that's how much compute and demand we're going to need to be able to make AI a real thing. I mean, it is just, and Elon has echoed the same statement about data centers in space. So has Bezos. So I don't know if they're just, BSing about it. I think they legitimately feel, Earth is not enough to get all this energy and we're going to have to go into space. Speaking of space as well, Raytheon announced a strategic collaboration with AWS to improve services for space customers. A lot of space headlines this morning, and all of those could be helping Rocket Lab and ASTS. AMD now going green. S&P 684. Okay, maybe we're getting a little move right there. Nvidia 182. That one going green. ASTS 6957, 13% on the day. Is ETH moving? Is the Fusaka thing helping us? Yep, back to 3,200. Okay. ETH getting a move. Amit, will you cover Rubrik tonight? I will not be having a market close tonight. I will be at an event, and you guys will see that event later tonight. But I unfortunately will not be doing a close. So Rubrik, Ulta, and DocuSign are some of the main companies reporting today, along with ChargePoint. Rubrik, I know, is the big one that people care about, but we'll talk about it tomorrow on the market open. Ethereum right there, 3,200 on the day. D-Wave as well. That one having a great move. QBTS following up from yesterday. Continuing to move. Snowflake beat earnings. Yeah, dude, I don't understand why Snowflake's down. I really am confused about that. 9% feels ridiculous. Maybe they were priced to perfection, up 60%, but those are good numbers. Seems like AI is being a catalyst for the business. So it is weird. Salesforce as well, pretty good numbers, but Salesforce cannot get a meaning. I think Benioff just has to be so pissed about Benioff is one of those guys who, feels that he deserves a premium on his stock. He's been delivering consistent revenue growth for like 20 years at this point. They're doing 40 billion in revenue, but no one cares. No one cares about Salesforce. Maybe that's where the opportunity is, but this year it's been where the opportunity cost has been. That was good. See, that was like, maybe that's where the opportunity is, but this year that was where the opportunity cost. That was, if I say so myself, that was a quite exceptional use of vernacular in the heat of the moment. I just want to say that was, I got to give myself some credit on that. That was pretty decent. But anyway, Salesforce, it does feel like no one cares about Agentforce, even though it's growing. And, for the people that say Palantir is overvalued, it's too expensive, it's like, well, people care about Palantir. People actually care. Part of the reason people actually care is because Karp can get them to care. You got a lot of clips from Karp going viral over the past 24 hours as he was at the DealPoke Summit. And here's a couple of those clips and what he said yesterday as well.
In this country, you have 1% of the country in prison, 1% who were in prison and therefore have no rights. Do you know what happens to you when you go to prison? They take you away from your kids. You know who that happens to? Disproportionately working class, disproportionately Black and Hispanic men and white men in the underclass. Where are the thousands of articles about them? Nobody cares, and they don't care because it does not either serve the ability, the desire to force me to vote for one party, which basically takes away all my power. That's effectually what it does. If I agree to say this is the worst thing in the world, I essentially have given up my vote. My vote is not for you. My vote is for these two issues.
Now, I watched the entire thing last night. The context of this was really important. Karp was saying, Andrew asked him about like, well, Karp, you say you're a Democrat, but you're here, publicly praising Trump. Like, what's going on? And Karp's like, look, I'm pro-choice. I believe that women should have the right to have an abortion, but that's not my number one issue. And so am I going to be indebted to the Democratic Party because they're pro-choice versus pro-life? Or am I going to say my number 1 and 2 issue, which is not pro-choice, will elevate a different political party for my vote? And I think the broader sort of sovereign individualistic argument that this entire country is based on is that you have the freedom, the ability, no matter who you are, to cast your opinion, because your opinion is treated as an equal opinion to everyone else. A hedge fund manager gets to vote in the election, and so does someone who is, making $40,000 a year. Their votes matter. And so Karp's argument is like, you can't say my vote has to go to the Democrats just because I believe in some things and they believe in other things if I have other agendas that I care about.
The second reason they don't care is because somehow no one has empathy with any of those people because none of us really deal with those people. At Palantir, we are on the side of working class Americans. We support people who go to the military. We save their lives. We bring them home safer. Our AI actually makes workers more wealthy, more valuable. And the 10 to 15 million people that love me, despite what's written, half of them made a lot of money on us. And you know what they're like? They're like people like me who think, you know what? We have to do better. Of course we have to do better.
And then this was Karp speaking about everyone saying that he shifted his political party.
I didn't shift my politics. The political parties have shifted their politics. The idea that what's being called progressive is in any way progressive is a complete farce. I've been progressive since the beginning of Palantir. I'm continuing to be progressive. I grew up in a highly intellectual, mostly Jewish, incredibly left-wing environment. And every Saturday and every Friday, I heard a lecture about how the conservatives are going to destroy this country with illegal immigration because it's going to undermine the fabric of the American worker. That was 50 years ago. That's what it means to be a progressive. And being progressive doesn't mean just, it feels so good to be involved in dysfunction, things that can never work, a form of socialism that's never worked, having no meritocracy. That's not progressive. That's honestly cowardly. And most people half my old party knows it. They don't speak up. It's bullshit. It will never work. And it does not help. The biggest problem with that is it's not helping the poor people that they claim to serve. If you think that's helping a Black person in the inner city, you're ridiculous. The last thing anyone in this country needs is a dysfunctional educational system and handouts that have never worked and are not going to work.
Okay, let me interrupt you.
So you had Karp making his argument and making his case at that summit. And, ultimately, these are the things that he has believed in for a while now. And as his public persona and public brand continues to grow, so does the distribution of his ideas. It's kind of crazy. Karp had a pretty big interview yesterday at the New York Times, and Jensen had a big interview with Joe Rogan. So just the age of these CEOs elevating their voices based on the distribution of their ideas, because everyone cares about what they have to say because they're running these companies that are the most important companies in the world, is pretty incredible to see. Nvidia right there, 183, broke out to a high of day, 183. Let's see if we can get this thing to 185 again. I did buy more Nvidia yesterday at 180. I know I bought it 170 a week ago, but it really is not making sense to me why after those earnings this thing is stuck. And I'm not saying it has to go to 220 or 230 anytime soon, but I think closer to 195 it should be at based on those earnings. Meta is still holding the 4% move. AMD flat. Cantor Equity Partners. This is a Bitcoin treasury, right? CEP. Is this Jack Mallers thing? This is up 24%. I think it has to do with Cantor Fitzgerald, but I believe that one is a Bitcoin name and that one's up about 20%. Brandon, thanks for the super chat. And can you check out AMBA and AEHR? Next phases in the AI is to build out the SIC and chip quality testing inference opportunities in drones, AVs, and security cameras. You know, AEHR is something that Roy really likes. I think this is like almost 2 to 3% of his portfolio, if I'm not wrong. So yes, I can definitely look into those names. I will write those down. But Roy has a bunch of videos on his channel about AEHR, as he thinks that's going to be a big one going further as well. BM&R making a move on the day as the Fusaka upgrade hits ETH 3,200. BM&R up 2%. And that's moving higher. Wow, ASTS 14%. My goodness. This one not stopping. $70, back to 70. Back to 70 for ASTS. Iren, are we pumping? We all know why. We all know who said to buy Salesforce and sell Iren yesterday. So sometimes when you get the Kramer signal, you get a move. Again, this is the thing about Kramer that's so, like, you would think after 40 years, he would have realized when a stock has a massive downturn, you don't say to sell because you're just going to look dumb. Because if it's somewhat of a high quality company, it doesn't even have to be an amazing, just somewhat of a decent company. Usually after a 15, 20% drawdown, like the bleeding stops. Unless the company is absolute shit garbage, which there are some of those names in the market that still recover after a 20% drawdown. Like you tend to get a bounce, even if it's a small bounce. And every time he sees this, like he's like the retail investor, like the epitome of the retail investor that doesn't know anything. Because as soon as a stock goes down, he's like, all right, it's time to sell. It's like, no. That's when you wait. Maybe you don't have to buy, but you definitely don't sell at the lows. Iren was down 20% over the past 3 days, and you're going to sell it? Like that doesn't make. And then he looks dumb because then it pumps because yeah, like if it's a somewhat of a quality company, people are going to buy that dip, and it doesn't make any sense. So you got Iren moving right there, up 2.5%. Palantir at 176, BM&R at 34.28. Oh, we got some coverage on this Netflix Warner Brothers move. Let's pull up some of this analysis right here. I really do think it would be bullish for Netflix, but there's also regulatory hurdles to even get the deal completed. So let's hear a little bit of how this might end up playing out.
Should send alarm to antitrust enforcers around the world. He says if it were to materialize, it would raise serious competition questions, perhaps more so than any transaction I've seen in about a decade. He said when Netflix has real competition, viewers and artists win. Increasing their dominance this way would mean the end of the golden age of streaming for content creators and consumers. So you're saying you agree with him?
I say I agree with him. I think Senator Lee's a very skilled antitrust lawyer. He was chair of the antitrust subcommittee during my tenure at DOJ, and we saw eye to eye on a lot of issues. I think this is one where we probably view it through the same lens. It reminds me a lot of the situation that I confronted at DOJ with Spirit JetBlue, where Spirit was in negotiations with Frontier, and then JetBlue came in with a much higher bid. A lot of folks, including Spirit's own management, said that the deal would raise antitrust concerns, but shareholders persuaded Spirit to take the premium from JetBlue and abandon the deal with Frontier. As a result, they found themselves in the antitrust crosshairs, and the deal got blocked, and everyone was worse off. So if you're Warner right now, you have to think very carefully about, one, whether you need to merge with anyone, which I'm happy to discuss, because if you think about Warner, it's frankly not done well every time someone buys it. Going back to the AOL days, right? It's like the ring from Lord of the Rings. It's my precious. Anyone who touches it seems to struggle with it. But beyond that, you have to think about, what kind of risk am I taking here? Is it really worth the premium to incur that risk?
But Jonathan, though, does the board of Warner have that luxury of saying, hey, maybe we can go it alone? We have 3 bids on the table. The stocks responded. Shareholder duty would imply that they need to maximize, value if you do have some reliable bid out there.
Yeah, isn't that the Revlon case?
No, that is the challenge they face, which is why they need a strong base case for go it alone. But I do think that there's history here, which is that the assets really have not thrived.
Let's do a poll right here, see what people think. Do you think Netflix ends up buying Warner Brothers? I just think it would be such a massive move in the media world, but it might take years for it to even materialize because, the regulators, unless Trump tells the FTC to just let it happen, which is possible, it would end up getting held up in court. I don't know why Amazon's down. It's confusing to say the least. This one has been stuck. Dude, this was at 238 yesterday. Like 228 is, I don't know. It's weird, dude. End of the year, Amazon selling. I mean, it's barely had a year to begin with and still getting hit. Not sure. I don't see the headline either. I mean, Rosenblatt, they came out today. They said, hey, price target 305. Analysts sees AWS growth as sustainable post reinvent with valuation supported by 20% EBITDA CAGR through 2027. Don't see any downgrades coming in. But stock's still getting hit right here. I don't know if it's good for Netflix to buy Warner Brothers. Makes more sense for Paramount to buy them. Not sure if it's good for Netflix. They should not change their business model. Well, they wouldn't be buying the TV stations. They would be just buying the streaming, like the HBO Max, the DC, all that stuff. But like even then, it would still incur a lot of debt for them. My thing is just like Netflix needs new content. Like I don't know if they can keep coming up with Stranger Things. Like it's easier to get Friends. Like so many people just want to watch Friends. So many people discovered The Office because it was on Netflix in 2015 and now it's on Peacock. So just being able to own those assets from an IP level is important. Yeah, Kris is right. Eventually Trainium is going to have a major impact on AWS as well, which I think is a massive bull case for Amazon. The 1.1 million layoffs, I don't think is causing any like broad pressure on the stock market today. That news has kind of already been baked in. It's just a very important stat for everyone to remember that since 2020, we have not had 1.1 million layoffs. But the takeaway from that is the labor market's weak. And, as a result of the labor market being weak, the Fed probably is going to need to cut. Here's a little bit more coverage right there on the labor market. But it all but confirms this rate cut probably ends up happening.
Challenger numbers, which we have been watching with increased focus, especially since we haven't gotten a jobs report, a monthly jobs report, showed that employers announced 71,321 layoffs last month. This is according to the job placement firm Challenger Gray and Christmas, and it is a 24% jump from the planned layoffs in November 2024, so a year earlier. That Challenger data has continued to point to elevated layoffs and is seen as problematic for the labor market. On the plus side, we got the government jobless claims, the number of Americans filing for unemployment claims in the last week. And keep in mind, it includes Thanksgiving, so it could be exaggerated by that. But it's historically very low, and that is a good sign for the overall labor market. Sort of contrary to what we just heard, 191,000 Americans filing for new unemployment claims. That is the lowest level since September 2022. It speaks to the no hiring, no firing economy. Again, if you saw mass layoffs, you would see this number go up because more Americans would be filing for unemployment claims. We're just not seeing that in the data. I don't know.
So that's the dichotomy, right? Like it's this no fire, no hire labor market. And I think that's one of the better ways to describe it. You should be seeing way more people file for unemployment if we're seeing mass layoffs. Which means we're seeing layoffs. They might just not be mass layoffs. Now, what's the case with the rate cut? The rate cut hopefully comes in before they become mass layoffs. But the rate cuts also help the equity market. So that is kind of the spot we're in going into 2026. And I think it's actually a really good spot to be in. The bears claiming doom and gloom, the consumer's dead, layoffs, recession, yada, yada. It's like you're just not seeing the data to identify that. And maybe, there's a blind spot in the data and eventually that's going to happen. But if we're looking at the data, we don't see that. For the bull saying everything is perfect, don't worry about it, that's also not true. But the nuance in the middle is more bullish than bearish because you get the rate cut to stop the labor market from getting that bad, and the rate cut ends up supporting equity prices as well. So I think it's not a horrible setup at all going into 2026. And I think it makes more sense than not. S&P right there, 683. Basically flat on the day, not moving too much. Schwan, thank you for the super chat. What did Jason say about Hood reaching 135? Will it go up or down? Jason said Hood consolidating between 120 to 135 is bullish. He doesn't see the 150s happening again as easily. He thinks it's possible, but he also thinks below 120 would be a buy the dip. So realistically, that 120 to 135 range is pretty strong. Now, if we close above 135, he did say on Tuesday, then that's really bullish. But question is, does that close above 135 get us to the 150s? Do a poll and see if people are having layoffs at their current jobs. That is a good poll question. So let's do that poll. 65% of you, by the way, said that Netflix will buy Warner Brothers. So let's do a poll right here. By the way, HIMS is launching in Canada today. HIMS is launching in Canada today. See the headline right here. HIMS is launching, HIMS and Hers officially launching in Canada today. Maybe that's why the stock is up 5% as well. Do you have layoffs happening where you work? Okay, so that is a question. Are you seeing layoffs at your employer? And, I would imagine there's definitely some people that are seeing that happen. I mean, I know a couple of you work for Amazon, so quite literally, you're seeing some of that stuff take place. And Amazon was the big one last month with 30,000. Draco says, no layoffs, we are hiring. Some people said we did last month. Scoozy says, I'm a small business, just hired 3 new employees. Dove says, no layoffs, we're hiring. Wow, actually more people saying hiring than not. Someone says yes, because I work for the federal government. Dude, Doge, remember when we all thought Doge was going to be a thing? I was a cheerleader for Doge. I really thought the idea made sense. I really thought they were going to make this government more efficient. That shit didn't happen. That shit did not happen. We thought it had a shot. Elon tried. I really do think he tried. Tesla stock got hit in half while he was trying, but Tesla literally went from freaking 488 in December of 2024 to March. It was at what, 210? Yeah, so he basically lost 50%. That's when Elon was in the thick of it when it came to Doge. And that just didn't end up playing out. Grab right there at 526. Rocket Lab, 7% day. Back-to-back big days on Rocket Lab and ASTS, as that stock is now up 14% on the day. I want Elon to try again so I can buy the Tesla dip. Dude, do we think Tesla holds 400 next year? Do we think like Tesla holds 400? 60% of you said no, you do not see layoffs happening where you work. I'll put that question in the chat. Does Tesla hold 400 in 2026? Hold meaning like it could dip below it here and there, but it's not meaningfully going to dip and stay below 400. Like, do we think it has a shot to actually sustain that level? Because as per Elon, there's not going to be earnings growth until the earliest Q3 of next year. But now that he has his compensation package, now he bought $1 billion of stock at 385. Maybe the market doesn't care. If robotaxi keeps happening, I see 500. I think we will definitely have to get a lot of progress on that in a more meaningful way to make it become a thing. Dude, thank you for everyone who's been sending me these screenshots as well. It definitely is very humbling. Shout out to Michelle. I just saw her tweet, and a bunch of you guys tweeted. But yeah, YouTube did this wrapped feature. I think it's a great idea because Spotify did it for like 5 years, and this is the first time YouTube did it. And Yeah, a bunch of you guys have been tagging me as like your top channel. You guys want to know my top channel? I couldn't believe this shit when I saw it. I really couldn't believe it when I was like, I didn't think I like this guy this much, but I guess I do. I say this as one of his top stocks that he talks about is ripping at the moment, BMNR. Look at that, 4% move right there as Ethereum continuing to move. Freaking Tanner was my first channel. I couldn't believe it. I was like, do I watch Tanner that much? I don't know how ESPN got in there. Like, I don't even think I'm that big of a sports guy. CNBC, obviously, The Compound. I mean, I watched their podcast once a week. I didn't think it was like my top channel. And then Steve, of course. Steve started his channel literally a month ago, and he became my top 5. But this was confusing to me because I was like, I thought I watch a lot of variety on YouTube. I guess I don't. I guess, like, you know, that's the beautiful thing about like the way the algorithm works and like building a community on the platform. It's like sometimes people just have a routine, and I guess Tanner's part of my routine. Steve's part of my routine. CNBC is obviously part of my routine, and that ends up being to your go-to every day. But I couldn't believe it, bro, because like I'm definitely not Tanner's top channel. So it's this like weird, like it's this weird, like you know, when you're in a relationship with someone and like you like them more than they like you, and it's kind of like I don't like this, like, because I'm definitely not his top channel, and I just feel like I'm giving too much and I'm not getting enough in return. So it's kind of weird, dude. It's kind of freaking weird. But Mr. Tanner is my top channel. Palantir right there, 176. Bloom Energy, 9% on Bloom. Look at that. That's moving today. Oklo's up 10, and then Nvidia, 181, up 1.2% on the day. Okay, this is a good comment. He's your top and you're his bottom. That's I'm not beating the allegations on that one, but that was a funny one. That was a funny one. Tanner just doesn't want to admit how much he loves you, Amit. We got to see Tanner's daily recap, his like YouTube recap. I want to see who Tanner's top channel is. I am curious now. Because I sent this screenshot to Tanner yesterday and he didn't respond with his screenshot. So to me, I'm like, he's definitely cheating on me, dude. Because like, I sent him the screenshot thinking he would respond with his screenshot, and I'd be like, oh, cool. Like, we both watch each other. But I guess he's watching something else on YouTube, dude. I guess he's watching something else. All right, guys, that is it for me. I am out. I will be in an event today in New York City, so that's why we will not have the market close. But I will be tweeting about it later throughout the day, so you guys will see it. And we'll keep going from there. It's pretty much the end of the week, which is kind of crazy that we are already near the first weekend of December. But nonetheless, that's where we are. Nvidia up 181, 1% of the day. Palantir Nvidia partnership was a big deal today. Nvidia right there, 181. Palantir at 176. Robinhood 134.71. Meta, big news as well for them to cut the metaverse potentially. That's up 4%. Shout out to Kris. He deserves the gains on this one. Iran, that's up 2%. Salesforce up 1.43. You got Amazon, which again is down even further, 227. Not sure why that's happening. Space Mob, congrats, big day, ASTS and Rocket Lab. And then you have the S&P 500 at 682.79, Robinhood at 134, and then Palantir right here at 176.22 on the day. All right, that's it for me. Thank you, everybody, for being here. We'll be back tomorrow, and we will keep going from there. Amit, you are number 4 in my top channels. I appreciate it. For everyone who sent me the screenshot, I really, really deeply do appreciate it, man. It's very humbling to be part of someone's rotation and be part of their daily routine, and I do not take it for granted. And yeah, it's just cool. Sometimes you develop a routine with a creator, and you're there every single day, and it's just part of your workflow. And it's very, very, very humbling throughout the day, whether you guys are working or with the kids or driving, for me to be in the background, be part of your daily lives. I deeply, deeply appreciate it. And hopefully I can just keep bringing more value on the show. We have a lot of plans for 2026 that I think can accelerate it to a new level. Have a lot of interviews that have been starting to line up for 2026. Some are big, some are big but not huge, and then some are in the ballpark of potentially being massive. So working really, really hard to see if we can materialize these things and just get more people on the channel, and I think it'll be fun. And we're going to keep going. We're going to keep going into 2026. All right, word of the day. Let's do this right here. Again, we are on these finance word of the days. We can do a different prompt later, but I think like every week we can do a certain prompt that can get these different word of the days. Amit is my work from home workmate. Yeah, basically all we are all work from home homemates together. Like, dude, my sister took off yesterday. She was spending, my cousin's leaving to California later today. And my sister spent off she said she was feeling sick and she just wanted to relax. And I went home last night and I just saw her laying down watching TV. And I was like, bro, and so was my cousin. I was like, bro, for 4 days from Thursday to Sunday last week over Thanksgiving, all three of us just sat on the couch and just chilled. And we watched movies and ate junk food and all this stuff. You both are acting like you're on vacation again. So I was giving them a hard time. It was like, it's not time for vacation, bro. We got to get to work. Like I did like 3 podcasts yesterday, 2 live streams, Twitter spaces, like this, like I was just at 3 different meetings. I came home, had a 15-minute meeting before I could even come back upstairs to see them. And so I was like, you guys got to get your asses to work, bro. What the hell is going on? And then my sister was like, you literally wake up every morning, you go to your computer and you talk to a screen for 4 hours and you're telling me about work. And I was like, look, when you can't put it like that because you're delegitimizing what I do every day. She's like, oh, legitimacy is like you just talk to a computer. Like, what are you complaining about? I was like, you don't get it. I was like, I don't know what to tell you. And then I was like, Microsoft had this stupid reaction. Market started dumping. Everyone was freaking out. I was like, do you understand the pressure of being able to communicate why that's happening? She was like, that's not even a real job. I was like, all right, whatever. But that's what she said yesterday. All right, word of the day, disintermediation. Disintermediation, the process where customers or capital bypass traditional intermediaries like banks or brokers and go directly to the source for financial services. Crypto's original promise was massive disintermediation, removing banks entirely from the transaction layer. Okay, I've definitely heard of this word before in a variety of ways. Disintermediation, not like the craziest finance word, but basically saying customers going through a different intermediary to be able to get something done. In this case with crypto, obviously, if you don't have to go through a bank, the ironic thing is, now the banks are embracing crypto. So you kind of do have to go through a bank or a financial institution to access like a crypto ETF. But the goal of crypto is to disintermediate from the traditional finance institution. So that's what we got. That is what we got on the day. My wife doesn't get it either, Amit. Dude, I always give her a hard time because it's just fun to like mess with her and say this stuff. But like she always comes back with it's like, you don't even work. I'm like, no, I do work. It's a different type of work. But it's like fun because like me, we roast each other back and forth. She's like, you just sit on your computer all day. I was like, yeah, but there's a nuance to what it took to even get to this point to be able to talk and the pressure of this moment and being there every single day. And like, obviously have people watching, dealing with other people's opinions. Like it's a totally different type of world, type of job. But she's right. Like at the end of the day, I'm not getting in a car and driving. I did that for 2.5 years before I did this. So I know what it feels like to drive 100 miles every day back and forth. But it's just a different world. But she was dead ass just sitting on the couch, like relaxing, acting like we were on vacation. I was like, bro, vacation's over. We did that for 4 days. We did that for 4 days. Got to get back to work. It's time to work. Siege, thank you for the super chat. Appreciate you, brother. Amit, you have made my life a lot better. Thank you for everything. Thank you all for being here. Amit, you are in my top 3. If you have these screenshots, please send them to me or tag me in them. I've been responding to as many as I can. And again, I deeply, 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 deeply do not take for granted and appreciate being part of people's content rotation because you could choose to watch anything, choose to listen to anything. And the fact that you guys are here every day for me and this entire community means the world. So thank you, everybody. Appreciate it. I think you guys will like the event that's happening later today. I'll post about it on X. We'll talk about it tomorrow. And I'll see everybody on the Market Open tomorrow. Thank you, everybody. Appreciate it. I'll see you guys tomorrow. Bye, everyone.